Good morning, students. Welcome you all on the first day of FR classes. Students, my name is Alok Garg. And friends, I'm going to take your few sessions in the first part. Today, the topic is why Ind AS, what about Ind AS, and what is the relevance of Ind AS. So, to summarize, today we are going to talk about introduction to Ind AS, right? A roadmap for applicability of Ind AS to various entities and division 2 to schedule 3. Friends, we have three topic today, right? When I say three topic, so first I will introduce you with Ind AS, Indian Accounting Standard. Second, I will tell you Ind AS is applicable to which set of companies. Ind AS is right now applicable only to companies, right? But which set of companies, I will tell you. And I will also talk about, I will touch base on the format of Ind AS financial statement, which is division 2 to schedule 3, right? With this context, my dear friends, wishing you all the best for your future endeavors, for your learning sessions, right? And I'm starting the session on Indian accounting standards. First, let's understand what is the framework in India for accounting standard. Friends, in India, we have accounting standard, right? We have accounting standard, which is known as AS, accounting standards. Okay. You all have covered accounting standards, right, in CA Inter. So what about these accounting standards and how they are different from Ind AS, or how Ind AS are different from accounting standard, right? So whether these accounting standards are not Indian, when we are saying Indian accounting standard, whether these accounting standards are not Indian, rather it is reverse, right? The accounting standards are more Indian, right? So what does it mean? So accounting standards are those standards which are manufactured in India, produced in India, and marketed in India, and also packaged in India, right? So accounting standards are those standards which are manufactured in India, marketed in India, and produced in India. These are our old standards. These are our old standards, right? Accounting standard. What about Ind AS? Ind AS are those standards which are imported in India, means manufactured outside India. Sir, what does it mean? Ind AS are the converged version of IFRS, which is applicable to India, right? So from where Ind AS came? Ind AS came from IFRS. Ind AS came from IFRS. And what is IFRS? IFRS are the global standard, International Financial Reporting Standard, right? Global standard. So Ind AS came from IFRS, okay? So that way, Ind AS is imported in India, then marketed and packaged in India, packaged and marketed in India, right? So it's a it's a foreign product which we imported in India and we packaged and marketed in India, right? So since our old accounting standard we have named as AS, so the new standard we have named as Ind AS, Indian Accounting Standard. But our old accounting standards are more Indian, okay? So, but the name here for these new standards are Indian Accounting Standards. So both are Indian accounting standards, but the old one's name is Accounting Standard. The new one's name is Indian Accounting Standard. Friends, in our CA final classes, in our FR subject, this FR subject is 95% Indian Accounting Standard, right? All standards are there in FR, okay? So this FR is equal to Indian Accounting Standard. FR is equal to Ind AS, okay? You know, after qualifying CA exam, when you become a chartered accountant, institute has a post qualification course on Indian Accounting Standard. But in that course, in that post qualification course on Indian Accounting Standard, certificate course on Ind AS, the youngsters who have recently qualified CA final, they are not joining that course. Why? Because they have already read all the relevant Indian Accounting Standard in their CA final curriculum. You know who joined that course? The chartered accountants who qualified 7 years back, 8 years back, 5 years back, 20 years back, they are joining that course. Why? Because they have read accounting standards. They have read AS. Okay. But now for you guys, you are learning Indian accounting standard in detail. So for you guys, it is not that course may not be relevant because you already have a knowledge of Indian accounting standard because you will finalize, you will clear your CA final exam. Okay. So in India, we have two set of standard, accounting standard and Indian accounting standard. Okay. So friends, if you look at your screen, so there are three series of standard, right? When I say three series, the first two series, number one and number two, this is for corporates. Corporates means where the name ends with private limited or limited, where the name ends with private limited or limited. And the last one is for non-corporate. Who is non-corporate? For example, proprietorship, partnership, Hindu undivided family, association of person, body of individual, right? So NGO, NPO. So these are kind of non-corporate entities where it does not ends with private limited or limited. Friends, here we are only talking about companies. Okay. For companies, there are two set of standard. Number one, we have Indian accounting standard, which are notified under companies in the AS rules 2015, right? And who notify standard in India? Who notifies standard in India? So you know how the standards are manufactured in India, how the standards are produced in India. Do you know that? So friends, what happened? First of all, ICAI. ICAI draft. ICAI draft the accounting standards. Be it accounting standard, Ind AS, whatever. ICAI draft it. Okay. Then ICAI circulate it for the public comments, right? ICAI releases the exposure draft, etc., etc. Then once it is finalized, and of course, in ICAI, there is an accounting standard board. There is an expert committee under ICAI, expert board under ICAI, which develop the accounting standards or accounting guidance for the country. Okay. And in that accounting standard board, the representative from MCA, right? Representative from other regulatory bodies are also there. Okay. Then once ICAI draft the standard, discuss the public comments, take the inputs from the regulators, right? So then ICAI send these standards to NFRA, National Financial Reporting Authority, NFRA, right? NFRA is a wing under MCA, okay? So then NFRA, NFRA review those accounting standard drafted by ICAI, and NFRA also, whatever comments are there, NFRA gives those comments to ICAI, ICAI finalize those comments and give back to NFRA, and then NFRA send these accounting standard, recommend these accounting standard for notification to MCA, Ministry of Corporate Affairs, right? And MCA is the final authority under central government. MCA is notifying the Indian accounting standard. MCA is notifying the accounting standard and it becomes the law of the land, right? MCA is the authority which notifies the accounting standard, right? And that's how it becomes the law of the land. Okay. So this is the process of notification of accounting standard in our country. Okay. So friends, if somebody will ask you, Mr. Rajat, tell me, Ind AS are notified under which rules? The answer should be Ind AS are notified under companies Ind AS rules 2015. And who notifies Ind AS? MCA had notified Ind AS. Okay. Then the second, accounting standard. Sir, accounting standard, these are the old standard still applicable to few set of companies. Accounting standards are notified under companies accounting standard rules 2021, and it is also notified by MCA. For non-corporate entity, it is not in your syllabus. Accounting standard is not part of your syllabus. This accounting standard for non-corporate is not part of your syllabus, right? So this AS for non-corporate, AS for non-corporate, okay? AS for non-corporate. So non-corporate uses accounting standard which is issued by ICAI, right? So friends, for non-corporate, right, standard issued by MCA, standard issued by MCA is not applicable. Standard notified by MCA is not applicable. Standard issued by ICAI is applicable, right? Okay. So ICAI does not notify accounting standard. ICAI issues accounting standard, which is applicable to the non-corporate entities. So friends, this is the entire structure of this is the entire structure of accounting standard in our country. Okay, in our country, right? So friends, if I talk about this framework, Indian accounting standard, okay, which is notified by MCA, accounting standard notified by MCA, and AS for non-corporate issued by ICAI, three set of standard. Now talking about the format of the financial statement. Friends, so now for corporate, we are talking about only corporate, okay? Friends, now corporates are following Indian accounting standard. Corporates are also following accounting standard. Okay. I will talk about applicability later on. For example, there is a listed company which is following Indian accounting standard. There is an unlisted company, private limited company, which is following accounting standard. Okay. So listed company following Ind AS. For example, private limited company whose net worth is less than 250 crore, they are following accounting standard. Okay. I will discuss it in detail. So now the question is, from where listed company which are following Ind AS will get the format, from where the unlisted companies which are following accounting standard will get the format. Okay. So let me talk about that. My dear friends, when the Companies Act 2013 notified and which was applicable from 1st April 2014, okay. So there was a schedule 3. There was a schedule 3. Okay. In schedule 3, the format of the financial statement for companies are given. Okay. So there was a schedule 3. Okay. Then, my dear friends, schedule 3 provides the format of the balance sheet, format of the profit and loss, and the structure of the notes to accounts. Okay. So there was only a schedule 3, and that schedule 3 was applicable to the companies because at that point of time Ind AS were not notified, and only old accounting standard were applicable. Then on 16 February 2015, Indian accounting standard were notified. When Ind AS were notified? On 16 February 2015, right? And the first year of applicability of Ind AS was financial year 16-17. Friends, when Ind AS were notified? Ind AS were notified on 16 February 2015. Okay. 39 Ind AS were notified. And the first year of applicability of Ind AS in our country was 2016-17. Financial year 16-17, right? Starting from 1st April 2016, ending on 31st March 2017. Ending on 31st March 2017. Okay. Now, Ind AS are substantially different from accounting standard in terms of recognition, measurement, presentation, and disclosure. Ind AS are substantially different than accounting standard in terms of recognition, measurement, presentation, and disclosure. So, listed company being a listed company, they have to publish the quarterly results also. So when Ind AS become applicable to the listed company, they started asking, what will be the format for us? How we will draft our financial statement? Then MCA came and MCA said, okay. On 6 April 2016, MCA said, we are amending our schedule 3. And MCA told, whatever schedule 3 we have given you in 2014, right? So we name that schedule 3 as a division 1, right? The schedule 3 which we have already provided you, we are naming that schedule 3 as a division 1. Okay. And under this schedule 3, we are also giving some new format, right? And we are naming it as a division 2 to schedule 3. We are naming it as a division 2 to schedule 3. So earlier there was a schedule 3 notified in 2014. In 2016, they have amended this schedule 3 and they have made two part of this schedule 3, division 1 and division 2. And they told This old Schedule 3, which was applicable to the accounting standard compliant companies, this will be applicable as per Division 1. And the new section which we have inserted, which is known as Division 2, this will be applicable to the Ind AS compliant companies, right? For example, that listed company will follow Division 2 to Schedule 3 for the purpose of preparation and presentation of financial statement. Any private limited company on which Ind AS is not applicable, accounting standards are applicable, they will apply Division 1 to Schedule 3. They will apply Division 1 to Schedule 3. Is that clear, my dear friends? Is that clear? Not clear? Yes? Very good. Okay. So friends, we have Division 1 to Schedule 3, Division 2 to Schedule 3, and this Division 2 to Schedule 3 was notified on 6 April 2016. It was notified on 6 April 2016. I hope it is absolutely clear to all of you. Is that absolutely clear to all of you? Yes? Yeah? Okay. Now coming back to this. And friends, this Division 1 is for accounting standard compliant companies. Division 2 is for Ind AS compliant companies. Friends, then subsequently on 30th March 2016, the roadmap for applicability of Ind AS was notified for NBFC companies also, non-banking financial companies, NBFC companies also. Friends, the first year was 2018-19. The first year for NBFC companies was 2018-19. Now, NBFC company started asking, see, our business model is different. Our business model is different. Okay. So give us also a format of financial statement. Then MCA came on 11 October 2018. MCA came on 11 October 2018. 11 October, 9 days after 2nd October, after Mahatma Gandhi's birthday, after Bapu's birthday, 11 October 2018, MCA revises, amended Schedule 3, and MCA said Division 1 was applicable to the accounting standard compliant companies. Division 2 was applicable to the Ind AS compliant companies. But now we are giving you a new section, and the name of the new section is Division 3 to Schedule 3, which is applicable to the Ind AS compliant companies. Which Ind AS compliant companies? NBFC Ind AS compliant companies. Those NBFC companies like Bajaj Finance Limited, Muthoot Fincorp Limited, Sriram Transport and Finance Company Limited. Okay. So on these NBFC companies which are following Ind AS, Division 3 to Schedule 3 will be applicable. So friends, now you have understood Ind AS accounting standard, Division 1 to Schedule 3, Division 2 to Schedule 3, Division 3 to Schedule 3. Now, sir, from the CA final perspective, what is applicable to us? So you being a CA final students, you being a potential chartered accountant, future chartered accountant. So for CA final, Ind AS is applicable. Okay. For CA final, Division 2 to Schedule 3 is applicable. Okay. Division 2 to Schedule 3 is applicable. Division 2 to Schedule 3 is applicable, which is applicable to the normal companies, non-NBFC companies, right? For NBFC company, Division 3 is applicable. Division 3 of Schedule 3 is applicable for NBFC companies which are following Ind AS. Okay. You are only required to discuss Ind AS and the Division 2 to Schedule 3. Okay. Friends, as we understood, Ind AS came from IFRS. But why IFRS got lot of prominence? Okay. IFRS को इतनी prominence क्यों मिली? Okay. Let's discuss and understand with the help of this slide. Friends, you have the first gentleman on the screen whose name is Mike. Mike is from France. The second gentleman is Mi Chi from Hong Kong. The third gentleman is Morris from Kenya. The fourth gentleman is Muko Ono from Japan. The fifth one is Max from Australia. And last but not the least, Mr. Kejriwal from India. Friends, these 6 gentlemen went to attend a meeting in London, right? Mike from France only knows the French language. Mi Chi only knows the Chinese language. Morris knows Mandarin. Muko Ono knows Japanese. Max knows English. And Mr. Kejriwal knows Hindi. They are able to write, speak, understand, listen, converse only in their local and regional language. Friends, whether that meeting will be fruitful, whether you will get any outcome of that meeting. No, you will not get the outcome of that meeting. Right. Why? What is the problem here? What is the barrier here? Friends, what is the problem? What is the barrier? What is the barrier? Language is the barrier. Language is the barrier because everybody knows a different language. Everybody knows a different language. Okay. Everybody knows a different language. Okay. So friends, what is the solution? The solution is standardization. The solution is to have a common language. If the standardization will be there, right? If the common language will be there, the problem will be solved, right? For example, when I was working with HSBC Bank, right? So I was into the European financial reporting vertical of HSBC. I'm talking about 10 years ago. Okay. So friends, what I used to do, so I used to discuss, I used to converse with, I used to communicate with the people from 30, 40 countries. Whether I know all the languages of those countries? No, I don't know. I used to communicate with them via email or via, phone. I used to communicate with them only in English. Okay. So because English is the commonly accepted language, people knows English, right? So since there was a common language, so we were able to communicate with each other. If I am speaking English, other one is speaking Chinese, or I am speaking Hindi, he is speaking Chinese, obviously both of us will not understand each other. So the problem is language, different language, and the solution is also having a common language. Friends, do you know how many countries are there in the world? Almost 200 countries are there in the world. And do you know how many gaps, generally accepted accounting principles, right? How many accounting standards are there in the world? In the world, there are more than 50, 60 accounting standards. For example, there is Singapore gap, UK gap, US gap, Portuguese gap, Bangladeshi gap, Bhutanese gap, Indian gap. Okay. So Japanese gap, Canadian gap, Australian gap, African gap. So there are so many gaps in the world, right? So now Mike from France has to invest in the company of Max. Michipi has to invest in the company of Mr. Kejriwal. So Mike from France only knows the French gap, but Max prepared its financial statement under Australian gap. Michipi only knows Hong Kong gap, but Mr. Kejriwal prepared the financial statement under Indian gap. So will they be able to understand each other financial statement if they have to invest? If they have to invest in each other's company, will they be able to understand each other's financial statement? Will they be able to understand each other's financial statement? Tell me. Of course, answer is no. Again, sir, what is the problem? The problem is now reporting language. Earlier, problem was the language. Now the problem is accounting and reporting language, right? Why? Because everyone is speaking a different accounting and reporting language, right? Mike is speaking in French gap and Max is speaking in Australian gap. Mr. Kejriwal is following accounting standard, Indian gap. Michipi is following Hong Kong gap, right? So their accounting and reporting languages are different. So nobody will be able to understand the financial statement of the other countries. Now, what could be the solution? What could be the solution, my dear friends? Again, the solution is to have a common accounting and reporting language, standardization. But what could be that common accounting and reporting language? If somebody will tell us, you have to follow Chinese accounting standard, will you follow? You can follow Chinese phone, but will you follow Chinese accounting standard? Answer is no, because those accounting standard are manufactured for China, not for India. Now, what could be that accounting and reporting language which everybody should follow? Yeah. So friends, many name I have taken. UK gap, US gap, French gap, Hong Kong gap, African gap, Indian gap, Japanese gap, Canadian gap. What is common word? What is common in all these names? You know, I know you guys will say gap word is common. You are a chartered accountant. Sir, we are a student. Manifest that you are chartered accountant. Okay. Don't say that you are a student. Say you are a chartered accountant. You have to become a chartered accountant. Then why not you are saying today that I am a chartered accountant? So that entire universe will also gives you energy for becoming a chartered accountant. Yes. So friends, you are a chartered accountant and you know the concept of substance over form, right? So whatever name I have taken, UK gap, US gap, French gap, African gap, Japanese gap, Canadian gap, you are absolutely right. Under form, gap word is common. But under substance, you know what is a prefix? Prefix is the name of the country. In all these gaps, name of the country is coming. It means all these accounting standard, all these gaps are prepared, drafted, applied for the specific country, for the specific country, for the specific country. Okay. My dear friends, now, sir, which gap can be followed? IFRS. What is the full form of IFRS? International Financial Reporting Standard. Have you found any name of the country, continent, geography in the name of IFRS? Answer is no. So globally, international financial reporting standards have been drafted which are unbiased, no territory specific, no country specific. And if any country wants to apply these standards, they can use these standards. And my dear friends, that is why IFRS is getting a lot of prominence, and out of 200 countries in the world, almost 160 countries are following IFRS, are using IFRS. How to use IFRS, I will tell you. But out of 200 countries in the world, almost 160 countries are using IFRS. Okay. So my dear friends, talking about IFRS, all about, so International Financial Reporting Standard. Under IFRS, there are two series of standard. Under IFRS, my dear friends, under IFRS, there are two series of standard. IAS standard. IAS, it is not Indian Administration Service. It is International Accounting Standard. It is International Accounting Standard, IAS. And the other one is IFRS, series of standard. Sir, under IFRS, two series of standards are there, IAS and IFRS, International Financial Reporting Standard. Sir, what is the difference between these two? Friends, the standards which are issued up to year 2001, the standards which are issued up to year 2001, these are titled and packaged as IAS, International Accounting Standard. But standard which are issued after 2001, they are named as IFRS. After 2001, they are named as IFRS. Okay. They are titled as IFRS. Okay. So friends, International Accounting Standard were very old accounting standard. The first International Accounting Standard was notified globally in year 1973. So from 1973 to 2001, globally, almost 40 accounting standards, 40 IAS, 40 International Accounting Standard were issued. 41 International Accounting Standard were issued. Okay. So now these standards become very old. Okay. So in 2001, the mother body of IFRS, which is International Accounting Standard Board, decided that we have to review all these 40 accounting standards, 40 international accounting standard, which are issued up to 2001. And after our review, wherever we found the major changes are required, we will delete the old international accounting standard and we will issue the new standard under the name and title of IFRS. So friends, as of now, 16 IFRS are issued and effective, while you must be hearing IFRS 18. IFRS 18 has also notified. So, but from the Indian context, I am saying, so there is IFRS 1 to IFRS 18. There are 18 IFRS. In 18 IFRS, there was IFRS 4 on insurance contract. So that IFRS 4, that IFRS 4 was deleted. That IFRS 4 was deleted and IFRS 17 was issued. So under 18 IFRS, right, one IFRS is also deleted. So under 18 IFRS, 17 IFRS are live as of now. Why I have written 16? Because IFRS 18 counterpart Ind AS 11 it has not notified. But what you can say, instead of saying 16, you can say 17 IFRS. 17 IFRS. Okay. The total, the number is IFRS 1 to IFRS 18. The number is IFRS 1 to IFRS 18. Okay. But there are 17 IFRS. Okay. 17 IFRS because IFRS 4 has been deleted. And International Accounting Standard, they are 24 IAS. Okay. Right. And there are some interpretation also which become part of appendix in our Indian accounting standard. Okay, there are some interpretations also. Now, friends, you remember I have used the word 160 countries are using IFRS. 160 countries. Sir, how these 160 countries are using IFRS? Friends, there are two modes of using IFRS. There are two modes of using IFRS. One, adoption. Another one is convergence. First, talk about adoption. What is meant by adoption? You all are aware the meaning of the word adoption. Taking others' baby as your baby. As simple as that. Taking others' baby as your baby. For example, Middle East, Dubai. Do you know any company in Dubai or Abu Dhabi? Yes, Emirates. Emirates Airlines, Etihad Airways, right? Qatar Airways. So Qatar Airways is not in Dubai, but I'm talking about Middle East. If you talk about Middle East, they have adopted IFRS. And if you will look at any company of Middle East, for example, Emirates Airlines, you know what they say? They say that our financial statements are prepared under IFRS, which are adopted by the Dubai regulatory authorities, right? If you look at the financial statement of Europe, you know, for example, HSBC Bank, you know what they write in their financial statement? They write the financial statement of HSBC Holdings PLC. The financial statement of HSBC Holding PLC has been prepared under IFRS, right? Under IFRS, which is issued by International Accounting Standard Board and as adopted by European Union and European Financial Reporting Advisory Group, right? So friend, adoption means adopting IFRS as it is without any change. That is why under Middle East, Europe, Pakistan, they are calling it as a IFRS. Pakistan has also adopted IFRS. But what is the second route? What is the second route which you will use for applying IFRS into the country? Convergence. Convergence. Convergence means what we did. Our ICAI, Accounting Standard Board of ICAI, right, dialed a phone number of London and they called International Accounting Standard Board that can you please send your word files of IFRS and IAS, International Accounting Standard and IFRS to us. So they said they sent the word file of IFRS and IAS standard. IFRS includes IAS. Okay. They send the word files of IFRS and IAS standards. Why we asked for the word file? For making some changes in the literature which will be suitable to our country, our economy, our companies, right? So friends, now as per the treaty with International Accounting Standard Board, as per the agreement with International Accounting Standard Board, the moment we are saying that, we have done some changes, we cannot call it as a IFRS, right? We cannot call it as a adoption. We will call it as a convergence. Okay, right? So friends, since India has also done some changes, right? And that's how we are calling it as a Indian Accounting Standard, Ind AS, right? So what is Ind AS? Ind AS are the converged version of IFRS applicable to India. Now, my dear friends, my dear chartered accountants, you are, by learning Indian Accounting Standard, you are not becoming a chartered accountant for India. You are becoming a chartered accountant for 160 countries. Let me prove that. Let me prove that. Okay. So friends, in the year 2019, I am talking about December 2019. Okay. I am talking about December 2019. In the year 2019, I was invited in Dubai to speak on IFRS, and I got three standards. I got three standards. I had to speak on IAS 21, IAS 24, IAS 41. IAS 21, IAS 24, IAS 41. IAS 21 is on the foreign exchange rate, accounting for the effect of changes in foreign exchange rates. IAS 24 was on the related party disclosures, and IAS 41 is on the agriculture accounting. In 2019, I was invited in Dubai to speak with the Dubai participants to take a lecture on these three standards, three IFRS standards with the Dubai participants. Now, I am an Indian guy working in India, right? And I have learned Indian accounting standard. So when I boarded my flight from Delhi to Dubai, I opened my presentation on IAS 41, Ind AS 41. I opened my presentation on Ind AS 41, Ind AS 41. You know what I did? I removed the word ND. When I remove the word ND, it become IAS 41. And friends, my presentation on IAS 41 was ready just in 2 minutes. Then I open my presentation on Ind AS 24. I remove the word ND and I made a change at one place. And friends, in another 3-4 minutes, my presentation on IAS 24 was ready. Friends, then I opened the presentation on Ind AS 21. I removed the word ND and I did changes at two places. I did changes at two places. And friends, my presentation on IAS 21 was ready in another 5 minutes. So you won't believe, in 15 minutes, I was ready to speak with the Dubai students, Dubai chartered accountants, right, on IFRS just in 15 minutes. Just in 15 minutes. This is the power of convergence. This is the power of convergence. My dear friends, in India, when we did convergence, when we do the changes or modification, it does not mean that we have changed everything. No, no. You know, our Indian accounting standards are also more than 99% cut copy paste of IFRS. Our Ind AS are more than 99% cut copy paste of IFRS, my dear friends. Right? It's not like that when we did the changes, sir, what was the need of convergence? We had our accounting standard already. And since we had not adopted IFRS, then why? So friends, even by doing the convergence, it does not mean that we have changed everything in IFRS. Our Ind AS is more than 99% cut copy paste of IFRS. That's how I haven't done any change in IAS for Ind AS 41. I just use the word, instead of Ind AS, IAS. Simple. In IAS 24, I did only one change. In IAS 21, I did only two change. Right? Small changes. This is the power of convergence. Friends, I was talking about you become a chartered accountant for 160 countries, not only for India. Right? So friends, in September 24, I was invited in Singapore to speak on Singapore Financial Reporting Standard, SGFRS. SGFRS. What is SGFRS? Converged version of IFRS applicable to Singapore. Like India has done the convergence and they call it as a Ind AS. Singapore has also done the convergence. They call it as a SGFRS. Okay. So friends, I had to speak for 3 hours. I had to speak for 3 hours on Singapore Financial Reporting Standard. I visited Singapore for the first time. I never learned SGFRS, never taught SGFRS. Then you know what I did? I found, using the artificial intelligence, Google, and going on the IFRS website or SGFRS website, Singapore website, I found out the difference between IFRS and SGFRS. I know the difference between Ind AS and IFRS. Okay. Like they also did the convergence. So their literature is largely, substantially, significantly aligned with IFRS. So I found out the difference between these two standards. And I have converged my Ind AS PPT to SGFRS presentation, right? Just in less than 1 hour, I was ready to speak with the Singapore audience. When I boarded my flight, I trained my mind that Mr. Alok, you need to use the word SGFRS, not Ind AS, not IFRS. You have to use the word SGFRS while speaking with the Singapore audience, right? Is that clear, my dear friends? Is that clear to all of you? Yes? Absolutely fantastic. Absolutely great. Absolutely great. Okay. Now, friends, in November 2024, I was invited in Kuala Lumpur. Sir, are you telling us where you have visited? No, I am telling you that how I have leveraged my India's knowledge and how I become ready to speak with the global audience, right? So that you will also not keep the limitation of working in India. You have to be ready for the entire globe. That's what I am teaching you. That's what I'm telling you. So friends, when I was invited in Malaysia, Kuala Lumpur in November 24, I had to speak with the Kuala Lumpur audience, Malaysian audience for 2 to 3 hours. Friends, in Malaysia, MFRS is there, Malaysian Financial Reporting Standard. They have also converged IFRS. You know what I did? I found out the difference between MFRS and IFRS, which is largely aligned. Then I have converged my Ind AS presentation to the MFRS presentation. Right. This is how I spoke almost 2 to 3 hours with the Malaysian audience. Right. So if you know Ind AS, you know IFRS, you know the converged standards of other countries as well. Right? So friends, while doing the convergence, we did three type of changes. While doing the convergence, we did three type of changes, three kind of changes, right? Carve out, carve in, and removal of option. Carve out, carve in, and removal of option. Sir, as you said, that our Ind AS are 99% aligned with IFRS. There is hardly difference of 0.5, 0.6%. Yes, you are absolutely right. And you know this 0.5, 0.6 difference, this difference is of three types: carve out, carve in, and removal of option, right? Sir, can you explain what is carve out, what is carve in, and what is removal of option? Sure. Let's understand what is the meaning of these carve out, carve in, and removal of option. Very important for all of you, okay? Carve out. The meaning of carve out means applying a different treatment in Indian accounting standard. IFRS has given you a different treatment, but in Ind AS is IFRS has given you a treatment of X, but you are doing a treatment of Y. You are doing a treatment of Y. Okay. Friends, let me talk about the example of carve out. We have almost 10 carve out. Okay. So at 10 places in our 39 Indian accounting standard, we have taken a different treatment in comparison to IFRS standard. The example on the screen, for carve out is, friends, when first time you prepare the financial statement under Indian accounting standard, when you are moving from AS to Ind AS, जब हम AS से Ind AS में जाते हैं, when we are transiting from AS to Ind AS, when the company prepare the first Ind AS financial statement, the company has to migrate all the accounting standard balances, all the opening balances under AS, right? All the opening balances into Ind AS balances. All the accounting standard balances has to be migrated into the Ind AS balances using the Indian accounting standard, right? Now, For property, plant and equipment, for investment property, for intangible asset, right? For PP&E, for investment property, for intangible asset, for these three type of item, IFRS standard says that for computing the opening balance under IFRS, right, you have to either do the fair valuation of these three items and take that fair value as a opening value under Indian accounting, opening value under IFRS. So friends, जब आप पहली बार IFRS की बैलेंस शीट बनाते हो, फॉर एग्जाम्पल you are a company in Pakistan, for example. First time you are moving from Pakistani standard to IFRS standard. So IFRS says that first time when you prepare the IFRS financial statement, when you convert your old GAAP balances into IFRS balances, the opening balance under IFRS for PP&E, investment property and intangible asset should be at fair value, or you have to compute the opening balance under IFRS for PP, investment property and intangible asset using the IFRS standard retrospectively, right? So IFRS only gives you two choices. One, either do the fair valuation or apply the new IFRS standard retrospectively and then get the opening balance under IFRS. Friends, India is one of the largest country in terms of GDP. It is coming at the fourth or fifth number, right? So friends, we are a big country, and friends, we have our old accounting standard also, right? Since a long time, we have our accounting standard also. So my dear friends, what we did, we said, we will give a deemed cost exemption. We will give a deemed cost exemption for the first time adoption of Indian accounting standard. For all the companies which are migrating from AS to Ind AS, for computing the opening balance under Ind AS, what we said? We said we will also provide a deemed cost exemption, means for the first time, for the opening balance under Ind AS for PP&E, investment property and intangible asset, what we can do, we can use the closing balance of accounting standard as a opening balance under Ind AS for these three items, which can significantly reduce my transition cost, right? And friends, you will be surprised and happy to know more than 90% companies of India has used the deemed cost exemption while migrating from accounting standard IGAP to Ind AS. Okay, so this is a different treatment which we have taken in Ind AS, which was not there in IFRS. IFRS does not allow the closing balance of the old gap to be migrated as an opening balance under IFRS. It does not allow, but we have allowed it. Okay, but we have taken it. Now, so sir, how many carve out are there? Almost 10 carve outs are there. Okay. Then carve in. Sir, what is meant by carve in? We understood carve out. You told that carve out means taking a different treatment under Ind AS. But friends, carve in means putting additional guidance in Ind AS. Friends, there is only one carve in, and you will read, you will learn IFRS 3, which is Ind AS 103 for your curriculum. Friends, Ind AS 103 is on business combination. Ind AS 103 is on business combination. My dear friends, business combination means acquisition, merger, amalgamation. You remember AS 14, accounting for amalgamation, right? This is what your Ind AS 103 is there. So friends, in our old accounting standard AS 14, we allow fair value method as well as book value method, right? So in our AS 14, my dear friends, we allow fair value method also and book value method also. Fair value method means and book value method means, for example, you know, purchase method and pooling of interest method. Purchase method and pooling of interest method. Yeah. Friends, so if A Limited is acquiring B Limited, A Limited can measure the net assets of B Limited either at fair value or at book value. Book value means the assets and liability are sitting at whatever value under B's balance sheet, it will come at the same value under A's balance sheet, okay, at the time of acquisition. So friends, our accounting standard 14 has given us a choice. Now the standard, IFRS 3 says that, listen, you have to do the fair value mandatory for all the acquisition. We said okay. We will also apply fair value, right? But we said, what about common control entities? What about group entities? There is a group. Within the group, one company is acquiring another company. Within the group, one company is acquiring another company, right? One company is acquiring another company. So, and who is taking a decision? A single person sitting at the top is taking a decision. For example, he is Mr. A. Okay. And Mr. A is a promoter. Mr. A is a promoter. Mr. A is a parent of A Limited, B Limited, C Limited. Okay. So Mr. A has a control over A, control over B, control over C. Now C Limited is acquired by B Limited. Now C Limited is acquired by B Limited. And who is taking decision? This guy is taking decision. Now I will not have 3 companies. I only want 2 companies. So what I'll do, I will approve, I will, plan the acquisition of C Limited by B Limited. Okay. So friends, tell me one thing. So after acquisition and before acquisition. So before acquisition, who was the parent of C Limited and B Limited? Mr. A. After acquisition, who become the parent of this merged entity B Limited? Mr. A. So what is meant by common control transaction? So when the ultimate controlling entity, ultimate controlling person, ultimate controlling entity will remain same before acquisition and after acquisition, it is known as a common control acquisition, right? And Mr. A is saying, this is fantastic. So if I will do the fair valuation, keeping C Limited as a standalone entity, probably it will catch the eyes of shareholders. What I'll do, I will transfer this C Limited into B Limited. And as Ind AS 103 is saying, IFRS 3 is saying, you have to measure all the assets at fair value. So I will do the fair value and I will strengthen my balance sheet. And both entities are my group entities. Okay. It doesn't matter. If the money goes from one pocket to another pocket, doesn't matter. Friends, we know that these things could happen for the common control acquisition. We know that these things could happen for the common control transaction. You know what we did in India? We said, okay, we will use pooling of interest method. We will use pooling of interest method. We will use book value method. We will apply fair value method for all the acquisition except for common control transaction. We will use book value method, which is known as pooling of interest method. Means if a group company is acquiring another group company where the ultimate parent is same, right? If group company is acquiring another group company, we will not use fair value method. We will use pooling of interest method. So we have inserted an additional appendix C to Ind AS 103. We inserted additional guidance here. Okay. Right, my dear friends. So friends, another example of common control transaction. I'm not teaching you common control. You will have a detailed session on Ind AS 103. For example, A Limited is parent company of B Limited. A Limited is parent company of C Limited also. C Limited is parent company of D Limited. Means how this structure is there. This is A Limited. Okay. And A is parent of B. And A is also parent of C. And C is parent of D. Right. So D is the grandson of A Limited. So A Limited is the grandfather of D Limited. C Limited is father of A Limited. Sorry, my bad. A Limited is father of C Limited. A Limited is grandfather of D Limited. And A Limited is father of B Limited. Right? Okay. Now, B Limited acquired D Limited. This D Limited is acquired by B. Friends, in this case, tell me. Now the father become uncle. But whether grandfather has changed? For D, the father has changed. But for D, whether grandfather has changed? Answer is no. The grandfather, when C was the father of D, grandfather was A Limited. When B become father of D, still grandfather is A Limited. Right? So my dear friends, this is known as a common control transaction. In my lighter deliberation, I used to say common control transaction is a transaction where father may change but grandfather may not change. Okay? Yes. So ultimate controlling entity remains same. Okay? So we understood carve out, we understood carve in. Now removal of option. My dear friends, removal of option. What is meant by removal of options? Okay, friends. The first standard in IFRS and the first standard in Ind AS is IAS 1 and Ind AS 1 respectively. And the title is presentation of financial statement. Okay, presentation of financial statement. In Ind AS 1, it is also presentation of financial statement. Friends, in the profit and loss account, the IFRS says that in the profit and loss account, the expense, you have seen the profit and loss account, right? And you have seen the employee benefit expense, other expenses, repair and maintenance expenses, right? Rent expenses. You must have seen a lot of expenses in your P&L account, business promotion expenses, depreciation, finance cost, impairment. Have you seen those expenses in the P&L? Yes. Okay. So friends, in IFRS, IAS 1 says, IAS 1, International Accounting Standard 1 says, the expense can be classified by function method or by nature method. The expense can be classified by function method or by nature method. Okay. Expense can be classified by function method or by nature method. Right. Now, my dear friends, what is meant by function or what is meant by nature? Okay, we'll discuss. But Ind AS says that, so IFRS has given you two choices. IFRS says that if you have to present your expenses in the P&L, please categorize either by function method or by nature method. But Ind AS says, no. I am not giving you choices. I am not giving you option. I am removing the option. You have to categorize your expenses in the P&L only by nature method. Only by nature method. You have to classify your expenses only by nature method. Okay, only by nature method. So my dear friends, this is known as removal of option. So we have almost 3 removal of option in our Ind AS literature. Now, sir, what is meant by function or what is meant by nature? Let me tell you. Functional classification means more like a MIS based classification. MIS based classification. Right? For example, the company has 2 buildings, factory building and the office building. And of course, the company is depreciating the factory building as well as office building. The company has a depreciation of 100 lakh rupee on the office building. And the company has a depreciation of 200 lakh rupee on the factory building. The company has a depreciation of 100 lakh rupee on the office building. And the company has a depreciation of 200 lakh rupee on the factory building. Right? So friends, ultimately what is it? It is depreciation. But if you follow the function wise classification, this 100 lakh rupee will show as a office overheads. This 200 lakh rupee we will show as a factory overhead, just like a MIS. But what is a nature based classification? Doesn't matter. It is for office building or it is for factory building. Doesn't matter. Ultimately, what is the nature of this expense? Depreciation. Ultimately, the nature of the expense is depreciation. So this entire 300 lakh rupee will be shown as a depreciation. Okay, will be shown as a depreciation. Likewise, For example, employees who are working in factory, or let's say employees who are working in sales and distribution department, okay, and the other department, HR department, finance department, going by the function based classification, the salary of employees who are working with sales and distribution department has been shown as a selling and distribution expenses, right? So, but what is the nature of this expense? Ultimately, it is a salary expense. Ultimately, you are giving a salary, right? So it has to be shown as a employee benefit expenses. Okay. So this is the difference between function and the nature. In India, in our accounting standard schedule 3, division 1 to schedule 3, we were following nature based classification. And in India as also, we continue to follow nature based classification, right? So my dear friends, as I told you, we have the converged IFRS applicable to India, whose name is Indian Accounting Standard, my dear friends. And this Indian Accounting Standard, my dear friends, IND AS, this IND AS, what is this IND AS? So friends, this IND AS are the converged version of IFRS applicable to India. And what we did in IFRS, we did some changes in IFRS. We removed some, we applied some different accounting treatment. We added some guidance and we removed some option, and this has become a Ind AS standard. Okay. This has become a Ind AS standard. This is what we did. This is what we did. Okay. Is that clear? Is that clear, my dear friends? Yeah. So India has converged to IFRS. India had converged to IFRS, right? So when Ind AS were notified on 16 February 2015. How many Ind AS were notified? 39 Ind AS were notified, right? Friends, what is the difference between IFRS and Ind AS? Carve out, carve in, and removal of options. Carve in, carve out, and removal of options. Okay. Is that clear? Where are we moving, friends? We are moving from AS to Ind AS. We are moving from AS to Ind AS. This is just a Gyan slide. So as I already explained you, we are moving towards global approach from Indian approach. We are moving towards fair value approach versus historical cost approach, my dear friends. In 39 Ind AS, you will find more than 25% of Ind AS are talking about fair value approach. They are talking about fair value approach, right? In comparison to accounting standard, where we have a very limited usage of fair value approach. Friends, reporting versus accounting. You know, these Ind AS are very detailed. So today is the first day, but so today you all are infant. Today you are newborn kids in financial reporting. When you become infant, when you become a toddler, when you become a teenager, when you become adult, in Indian accounting standard, you will find if a financial statement of a company is 30 pages in accounting standard, it will automatically become 50 pages in Indian accounting standards. Why? Because of lot of disclosures. Right? So now we are moving towards a journey, not only in the accounting, we are moving towards a journey from accounting to reporting. Okay. Substance over form, my dear friends. This substance over form is beautifully inculcated. This substance over form is beautifully inculcated in the Indian accounting standard, right? So when you read revenue, Ind AS 115, I will take a session on Ind AS 115. I will take a session on Ind AS 116 leases, right? So when you look at consolidation, financial instrument, leases, revenue standard, you will find an amazing use of substance over form, right? So these standards have been drafted using the concept of substance over form. Then principle based versus rule based, standard, my dear friends. So these Indian accounting standard are principle based standard, right? So lot of subjectivity is also there. You have to apply your best estimate and judgment. So these standards are the principle based standard, not the rule based standard. Okay. Ind AS, which is Indianized version of IFRS in India. Why? Because this is used in more than 160 countries across the globe by way of adoption and by way of convergence. One language will enhance the comparability, understanding, and one set of books. Easy access to global capital market, attract foreign investment and low cost of capital. If you know Ind AS, you are a chartered accountant, you know Ind AS. Just within a day, are you ready to work with the Singapore companies in the controllership vertical of a Singapore company, in the controllership vertical of a Dubai, Middle East, Europe, Japan? Of course, yes. Of course, yes. Right? Because either they are using converged standard or they have adopted IFRS standard. If they have adopted IFRS standard, so what you have to do? You have to learn just 0.5, 0.6% because 99.5% is cut, copy, paste. You have to just learn 0.5%, right? And that learning you can build even while flying from India to Dubai in the flight only. Okay. Yes. And these standards are more transparent and more visible, my dear friends. Okay. Now talking about the literature, friends, we did a great job. When I say we, I'm saying ICAI, Institute of Chartered Accountant of India. So friends, in IFRS, as I told, IFRS 1 to IFRS 17, I am not using IFRS 18. Why? Because the counterpart standard Ind AS 118 has not yet been notified. Ind AS 118 has not yet notified. Okay. So if I'm talking about IFRS standard, which is issued by IASB, okay. So there is IFRS 1 to IFRS 1 to IFRS 17, okay. The another one is IAS. You remember I told you, these IFRS standards have been issued after 2001. These IAS standards are issued up to 2001. This international accounting standard was issued by International Accounting Standard Committee, which was the earlier name of the IASB, and revised by IASB. So there are 41 IAS 1 to IAS 41. Okay. IAS 1 to IAS 41. But friends, in IAS 1 to IAS 41, all the standards are not there. Many standards have been deleted and many standards have been replaced by IFRS series of standards. So friends, globally, there are two series of standard, IAS series of standard and IFRS series of standards. Okay. When I say IAS series of standards, these are the standard issued up to 2001, and IFRS series of standard, these are the standard issued after 2001. So friends, for IAS 1 to IAS 41, we have issued Ind AS 1 to Ind AS 41. We have maintained the same sequence. IAS 1, Ind AS 1, IAS 2, Ind AS 2. Okay. And friends, for IFRS series of standard, since globally there are two different names, IAS, IFRS, but in India we have issued only Ind AS, right? So if I have already used Ind AS 1 for IAS 1, can I again use Ind AS 1 for IFRS 1? Answer is no. I can't use Ind AS 1 again for IFRS 1. So what we did, for a IAS series, we started with Ind AS 1. For IFRS series, we started with Ind AS 100 plus 1. For example, IFRS 1, Ind AS 100 plus 1. IFRS 2, Ind AS 102. IFRS 3, Ind AS 103. IFRS 4, Ind AS 104. IFRS 17, Ind AS 117, right? So we started with 100 plus. Okay. And friends, whatever interpretations are there, we did a great job here. We pulled all those interpretation in the specific Ind AS, at the bottom of specific Ind AS, right? So we have given the respective interpretation in the form of appendix at the end of every standard, right? So this is the literature. Total, we have notified 39 Indian accounting standards. Sir, you are saying 39 Indian accounting standard, but here this is 41, 117. So not to worry, let me show you something on Excel file. I hope my Excel file is visible to everyone. Is it visible to everyone? Okay. List of Ind AS and counterpart IFRS standards. Friends, if you look at this Excel file, you will be able to understand it very well. Friends, IAS 1, IAS 2, Ind AS 1, Ind AS 2, right? Okay. Friends, there is no IAS 3, 4, 5, 6. Why? Because these IAS 3, 4, 5, 6 had been deleted and moved to IFRS series of standards. So friends, we have also not notified Ind AS 3, 4, 5, 6. You will not find Ind AS 3, 4, 5, 6. You will not find. Have you understood? So friends, why you will not find Ind AS 3, 4, 5, 6? Because we have maintained the same sequence. Okay, right? Now you have understood from Ind AS 1 to Ind AS 41, all the 41 standards are not there. Okay. Like IAS 7 and 8 is there. We have notified Ind AS 7 and 8. IAS 9 we have not notified. IAS 9 is not there. Why? Because it was deleted and moved to IFRS series of standard. So we have also not notified Ind AS 9. IAS 10 is there. We notified Ind AS 10. IAS 11 is not there. We have also not notified Ind AS 11. IAS 12 is there. We have notified Ind AS 12, right? IAS 13, 14, 15 is not there. We have also not notified Ind AS 13, 14, 15. You will not find Ind AS 13, 14, 15. Don't write to Board of Studies of ICAI that this study material is not right, because Ind AS 13, 14, 15s are missing. They are missing from the ministry level. Okay. So MCA has never notified these 13, 14, 15, 16. Have you understood, my dear friends, or not understood? Now you have understood that we maintained the same sequence, we maintained the series, and wherever the old IAS standard was replaced by IFRS standard, means the IAS standard was not present, we have also not notified the counterpart Ind AS standard. Okay, is that clear? Now, my dear friends, this is how we have done our convergence. Second, for IFRS series of standard, if you see, for IFRS series of standards, my dear friends, if you look at for IFRS series of standard here, all these IFRS series of standards from IFRS 1 to IFRS 17, from IFRS 1 to IFRS 17, what we did, we started with Ind AS 100 plus 1 and we end on Ind AS 117. My dear friends, you can see IFRS 4 was deleted globally. We have also removed Ind AS 104. So on insurance contract, we have Ind AS 117. Okay. So to summarize here, friends, there are 24 IAS standard. So in place of 24 IAS, we have issued 23 Ind AS standard. Sir, which one standard is missing? My dear friends, this IAS 26, accounting and reporting by retirement benefit plans. Friends, we have not notified this standard. Why? Generally, this standard is applicable to the non-corporate, generally, right? Okay. Trust NGO, generally, globally. But in India, Ind AS is not applicable to this NGO, trust, NPO. Okay. That is why, as of now, we have not notified Ind AS 26. We will notify when Ind AS will be applicable to these companies in India also. Okay. So that is how, my dear friends, in place of 24 IAS, we have issued 23 Ind AS. And where 16 IFRS are there, from IFRS 1 to IFRS 17, we issued 16 Ind AS 101 to Ind AS 117. So there are total 40 IFRS or IAS standard, but in comparison to 40, we have issued 39 Ind AS standard. Okay. Talking about the structure, my dear friends, for example, wherever the main standard were there, for example, IAS 16, the main standard. So we have issued Ind AS 16. Okay. There was a IFRIC or SIC. IFRIC or SIC is interpretations. So there were some interpretation related to the International Accounting Standard 16. So we have used the alphabetical appendix A, for the interpretations relating to the Ind AS 16 standard. And my dear friends, we have the Roman numerical appendix also. So how our Ind AS are structured? We have the main standard, we have the alphabetical appendix, we have the Roman numerical appendix, right? This Roman numerical appendix, appendix 1, this appendix 1 will give you the difference between IFRS standard and Ind AS standard, right? This will provide you the difference between IFRS standard and Ind AS standard. Is that clear? Is that clear, my dear friends? Okay. And my dear friends, let me tell you the grammatical difference between accounting standard and Ind AS. In accounting standard, there is a huge usage of the word may or should. The company may, the company should, but in Ind AS, largely the word used is shall. What is the difference between may, should, and shall? Where the may or should has been used, it seems like it is optional in nature. But where the word shall has been used, it seems like it is mandatory in nature. So my dear friends, I hope you guys have understood how these Ind AS standards have been drafted, how the numbers have been taken, how the series has been introduced. So now you guys must have been understood the Ind AS and IFRS series of standards. Yes, total 39 standard. Total 39 standard. Okay. Friends, I have given the detail of these standards in this PowerPoint presentation. I will share across with all of you. I will share across with Board of Studies, and Board of Studies will circulate it to all of you by uploading on the portal. Right? So on the extreme left, there is an Ind AS number. In the middle, there is a IFRS number. On the extreme right, there is a accounting standard numbers. Right? So friends, as I told you, total 39 Ind AS were notified, wide notification dated 16 February 2015, 28 March 2018, and 30th March 2019. Okay. Friends, do you know how many accounting standards are there? AS. How many AS are there? Do you know that? How many AS are there? There are 27 accounting standards. And do you know how many Ind AS are there? Yes, sir. You told just now 39 Ind AS are there. So how many more standards are there in Ind AS? 12 more. So my dear friends, these Ind AS are very detailed, very vast. Okay. So on the screen, you will find some standard. For example, Ind AS 41. Do you have any standard which talks about agriculture accounting in AS? No. In these 27 AS, no standard talks about agriculture accounting. Biological asset accounting, okay? Gaye bhains accounting, no standard is talking about. While India has a rich culture of agriculture. India is a country of agriculture, but we don't have any agriculture accounting standard. But in Ind AS, we have Ind AS 41. Sir, how come this Ind AS 41 has come, sir? This Ind AS 41 has come, because of IFRS. In IFRS, it is IS 41. These international financial reporting standard was developed in London. And London's economy is not agriculture economy, but they have also drafted a standard on agriculture. Why? Because IFRS standards are unbiased, no country specific, no continent specific standard. If any country wants to use this standard, like Africa is extensively using IFRS, and they are using this standard extensively. The commodity companies, the agri-commodity companies of Africa, they are using this standard extensively, IAS 41 extensively for their companies accounting and reporting, right? Insurance contract, my dear friends, we do not have any standard on insurance contract in accounting standard, but now we have a separate standard on insurance contract. Friends, share-based payment. We have a guidance note on share-based payment, but we don't have any standard on share-based payment. My dear friends, now we have a separate standard. We have a separate standard on share-based payment, right? Financial instrument 107, 109, 32. Friends, we don't have any standard on financial instruments in our accounting standard. Now we have 3 standards on financial instruments. Right. Sir, we do have AS 30, 31, 32. So my dear friends, AS 30, 31, 32 was never notified. It is not even recommendatory in nature. But this Ind AS 32, Ind AS 107, Ind AS 109, these standards have been notified. These standards had notified. Okay. Right. Is that clear? Is that clear, my dear friends? Yeah. So you can see there are a lot of standards, there are a lot of new guidance which is there in Indian accounting standard, right? Where we don't have the accounting standard, but we have the Indian accounting standard. Okay, right? Is that clear? Yeah. Great. So friends, we have covered overview of Ind AS. Let me summarize for all of you. Friends, we have accounting standard, we have Indian accounting standard. Okay. These are the two standards, two series of standard which are applicable in India. Accounting standards are notified under Companies AS Rules 2021, notified by MCA. Ind AS are notified under Companies Ind AS Rules 2015, notified by MCA. Friends, in CA final, we are learning only Indian accounting standard notified under Companies Ind AS Rules 2015 by MCA. Then friends, we have Schedule 3. Schedule 3 provides us format of balance sheet, P&L and some notes to accounts. Okay. Schedule 3 gives us the format of financial statement. And Schedule 3 also gives us the format of the statement of changes in equity in Ind AS. Schedule 3, under Schedule 3, friends, there are 3 divisions. Division 1, Division 2, Division 3. Division 1 is applicable to the companies which are preparing their financial statement under AS accounting standard. Division 2 is applicable to the companies which are preparing their financial statement under Ind AS. And my dear friends, this Division 2 is applicable to those companies which are not the NBFC companies. This Division 2 is applicable to those companies which are not NBFC. Okay. Division 3 is applicable to NBFC companies. Division 3 is applicable to NBFC companies. Okay. Which NBFC companies? Which are following AS or which are following Ind AS? Which are following Ind AS. Okay. My dear friends, what is IFRS? IFRS are the global standard, international financial reporting standard. These are the global standard. IFRS includes 2 series of standard, IAS series and IFRS series. IAS means International Accounting Standard, which had issued before 2001, right? And IFRS series of standard are those standard which have issued after 2001. Friends, from the series perspective, there is IAS 1 to IAS 41. There are 41 international accounting standard from the numbering perspective, but 17 IAS standard have been deleted and there are only 24 IAS which are live now. Okay. And friends, there are 16 IFRS standard, right? I'm not talking about IFRS 18, 19, 20. I'm not talking about them as of now. So there are 16 IFRS standard and there are 24 IAS standard. I am comparing with India. So there are 40 IFRS and IAS standard. Our Ind AS standards was notified by MC on 16 February 2015 and 39 Ind AS were notified. And the first year of that Ind AS applicability for Indian companies was 2016-17. In India, we have not adopted IFRS, we have converged IFRS. Since we have converged IFRS, that is why we are calling it as a Ind AS, right? While we have converged, but our Ind AS are 99%, almost more than 99% cut copy paste of IFRS, right? The difference which is 0.5, 0.6% of difference, this difference has been classified into 3 types: carve out, carve in, and removal of option. What is carve out? What is carve out, my dear friends? Carve out means applying a different treatment in Ind AS. Like we have applied a different treatment for computing the opening balance, for taking the opening balance in the first Ind AS financial statement for property, plant and equipment, investment property and intangible asset. This is one of the example I have told you, while there are almost 10 carve out. Then there is a carve-in. In carve-in, we said that in any acquisition, like IFRS, we will apply fair value method. But in case of common control transaction, we will not apply fair value. We will apply book value method, right? Which is pooling of interest method. Then friends, we have removal of option. Like one of the example of Ind AS 1 we have taken. IFRS allows the categorization of expenses in the P&L as per the function method or by the nature method, but we have only permitted nature method. So this is what we have discussed, my dear friends, right? So we have covered the first part beautifully. I believe the context setting has been absolutely clear to all of you, right? So friends, it's 8:34 now. Let's have a break and we will start at 8:45. Okay? Break start. Yeah, friends, now we reach to the second section of this session. India's roadmap in India. You can see the road, and the point is on the one side of the road it is AS, and the another side of the road it is Ind AS, right? So it is important to understand, since the country has two accounting standard framework, AS framework and Ind AS framework for the companies, which framework is applicable to which entities, right? So Ind AS is applicable to which entities, okay? So we will talk about Ind AS, right? Applicability of Ind AS on Indian companies, and on the rest of the entity on which Ind AS is not applicable, AS is applicable, right? So AS is automatic. Ind AS will discuss the applicability. Friends, I'm taking you on the Excel file, and through Excel file we will learn the Ind AS applicability. Yes, friends, the first notification came on 16 February 2015. Okay, the first notification came on 16 February 2015. And on 16 February 2015, two things were done. Number one, Ind AS were notified. 39 Indian accounting standards were notified. 39 Ind AS were notified. That is number one. Number two, 39 Ind AS were notified. That is number one. Number two, the roadmap for applicability of Ind AS was also introduced and notified on 16 February 2015. Now, we'll discuss Ind AS is applicable on which set of entities. I would request all of you, please write down. I'm sure that you are listening this video, you are listening this class lecture with a pen and the paper. Question number one, sir, Ind AS is applicable only to companies or non-corporate entities also. Ind AS is only applicable to the companies, right? Companies means which are registered, incorporated under Companies Act 1956 or Companies Act 2013. Yes. So Ind AS is only applicable to companies, right? Which set of companies we'll discuss. We'll come to the elimination criteria, okay? But right now Ind AS is only applicable to companies. Ind AS cannot be applied to non-corporate entities, okay? So on non-corporate entities, Ind AS is not applicable. Okay. Now, there are two types of companies: listed companies, unlisted companies. Very simple. Companies means where the name ends with private limited or limited, largely. Okay. Listed company means those companies which are listed on the stock exchanges, which are listed on the stock exchange. It doesn't matter if it is an Indian company which is either listed on Indian stock exchange or listed on the foreign stock exchange, overseas stock exchange, doesn't matter, right? It will be called as a listed company. So friends, either it could be a listed company or it could be an unlisted company, or it could be an unlisted company, unlisted entity, unlisted company, right? So Ind AS is only applicable to companies, right? There are two type of companies: listed companies and unlisted companies. Okay. So then, my dear friends, according to the 16 February 2015 notification, Ind AS is applicable to which set of entities? So Ind AS is, and I am talking about applicability as on today, right? As you know, Ind AS were notified on 16 February 2015. It's been almost 11 years and 4 months, if even 5 months, 11 year and 5 months that Ind AS were notified in India, right? If I talk about applicability as on today, July 21, 2026, Ind AS is applicable to which set of entities? So, while when Ind AS were notified, the first phase was 2016-17, Second phase was 17, 18, right? So this was the first and the second phase. But let's talk about the applicability of Ind AS as of today. So friends, number one, Ind AS is applicable to all listed companies. Ind AS is applicable to all listed companies. Ind AS is applicable to all listed companies. Okay. Means if a company which is listed on NSE, BSE or any other stock exchange, right, Ind AS will be applicable. Sir, if a company's equities are not listed, only debt is listed, right? Equity is not listed, only debt is listed. Then whether Ind AS will be applicable? No. Nor yes. Yes, it will be applicable. Yes. So Ind AS is applicable to equity listed companies also and debt listed companies also, right? So listed company means equity listed as well as debt listed. Okay. So if it is a equity listed or if it is a debt listed, then Ind AS will be applicable. Okay. Sir, if there is a listed company and you said Ind AS is applicable for listed companies, so do we need to look at the net worth of the listed companies also? Answer is no. There is a listed company whose net worth is negative 100 crore, negative, still Ind AS will be applicable. Okay. Sir, is there any exception to this rule that Ind AS is mandatorily applicable to the listed companies? Yes. If Ind AS is listed on the SME stock exchange, small and medium enterprises stock exchange, if Ind AS is, if if the company is listed, if the company is listed on the SME stock exchange, small and medium enterprise stock exchange, then Ind AS is not mandatorily applicable. Then Ind AS can apply voluntarily, but it is not mandatory. So my dear friends, Ind AS is applicable to all listed companies, be it listed in India, Indian company. Ind AS is applicable to Indian company, right? And that Indian company, be it listed in India or outside India, right? Ind AS will be applicable for the Indian reporting. Ind AS is applicable, be it debt listed company or equity listed company, right? Ind AS is not mandatorily applicable for SME listed entities. Sir, can you give us the name of any SME stock exchange? Yes, NSE Emerge. NSE Emerge is the SME listing platform of NSE India. NSE Emerge is the name of the stock exchange. NSE Emerge is the name of the stock exchange, right? For the SME listing platform, right? NSE Emerge. Okay. Right. Is that clear? Yeah. Is that clear, my dear friends? Okay. Okay. Now, sir, what about unlisted companies? Sir, what about unlisted companies? Unlisted companies whose net worth is more than or equal to 250 crores, Ind AS will be applicable to that company. Unlisted companies whose net worth is greater than or equal to 250 crore, Ind AS will be applicable to that company. For example, ABC Private Limited has a net worth. ABC Private Limited has a net worth of 240 crores as on 31st March 2025. Tell me whether Ind AS will be applicable to this entity on 25-26. Answer is no. Right? So in 25-26 also, ABC Private Limited will continue to apply accounting standard, continue to apply IGAP for the purpose of preparation and presentation of financial statement. Assuming ABC Private Limited has crossed net worth of 250 crore and it become 270 crore as on 31st March 2026. Tell me whether Ind AS will be applicable to that entity. Answer is yes. So Ind AS will be applicable immediately from the next year, not in 25-26. So since you prepared your financial statement as per IGAP, as per accounting standard for 25-26, that's why you got to know, oh, on 31st March 26, my net worth is 270 crore. Yes, now, Ind AS is applicable to me. Now means which date? Which date? Which period? 26-27. Are you getting me, my dear friends? Because let's say if it is a private limited entity, for private limited entity, you can file your books of accounts You can file your financial statement, get the audit of the financial statement by September. So for 25-26, when you complete the audit, then you got the final net worth, and this net worth is also as per audited financial statement. So for 31st March 26, the financial statement will finalize in September 26. So in September 26, when you get to know your net worth is more than 250 crore, how can you apply Ind AS in the year 25-26? So that is why whenever the net worth crosses 250 crores, Ind AS will be applicable immediately from the next year. Okay. So friends, Ind AS is applicable to all listed companies, right? Excluding SME listed companies and unlisted companies whose net worth is equal to or more than 250 crores. Sir, what is meant by net worth? We will discuss later on. Okay. Sir, if Ind AS is applicable to such companies, for example, if Ind AS is applicable to such companies, for example, Reliance, you heard about Reliance Industries Limited? If Ind AS is applicable to Reliance, why Ind AS will be applicable to Reliance? It's a listed company. It's a large listed company. Its market cap is almost 18 lakh crore. 18 lakh crore. Right. And they are the first company of India who has crossed a net profit of more than $10 billion, which is roughly 95,000 crores. In the year 25-26, their consolidated net profit was 95,000 crores. Okay. And their top line, their total income was almost 11,75,000 crores. Right. Yes. So friends, talking about this, let's take an example of Reliance. Reliance being a large listed company, Ind AS is applicable to Reliance. Now Reliance has a lot of subsidiary, associate, joint venture, right? And these subsidiary, associate, joint venture could be the small entities also. Yes, private limited, every entity is not a listed entity, or every entity's unlisted entity's net worth is not more than 250 crores, right? So Reliance may have a lot of small companies in the group. Reliance may have a lot of small companies in the group. Okay. Now the question is whether Ind AS will be applicable to those smaller entities, because they are neither listed nor their net worth is more than 250 crores. Whether Ind AS is applicable to those entities. If those entities will not apply Ind AS, then how come Reliance will do the consolidation? Right. Reliance has to prepare and present and file their standalone as well as consolidated financial statement under Ind AS. That's the question. So friends, now the notification 16 February 15 MCA notification says if Ind AS is applicable to a company, it is automatically applicable to the holding of such company. Holding means parent of such company, subsidiary, associate and joint venture of such company. Such means Reliance. If Ind AS, this is a Reliance. If Ind AS is applicable to Reliance, it is automatically applicable to the parent of Reliance. For example, Reliance Enterprises Private Limited is the parent of Reliance. Okay. So it is automatically applicable to the parent of Reliance. It is automatically applicable to the subsidiaries, associate and joint venture of Reliance. Okay. Subsidiaries, associate and joint venture of Reliance. Clear? Is that clear, my dear friends? Yeah. So now let's understand with the help of example, and let me check. Are you good in relationships or you are not good in relationships? What is the relationship here? If one company is called a subsidiary, for example, if Ram will say that I am son of Dashrath, what Dashrath will say? I am father of Ram, I am parent of Ram, right? If Ram will say that I am nephew of Dashrath, what Dashrath will say? If Ram will say that I am nephew of Dashrath, what Dashrath will say? Dashrath will say that I am uncle of Ram. I am uncle of Ram. Dashrath will say that I am uncle of Ram. I am uncle of Ram, right? So friends, I am uncle of Ram. This is what the relationship is all about. So if one entity will say, I am a subsidiary of that entity, what that entity will say? I am parent or holding company of that entity. If one company will say that I am a joint venture of that entity, what other company will say? I am venturer of that entity. If other company will say I am associate of that entity, the other company will say I am investor in that entity. Friends, this relationship is very, 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 very important, right? So if you see, the notification says if Ind AS is applicable to a company, it is automatically applicable to the holding of such company, right? So on the upstream, it has only covered holding. On the downstream, it has covered subsidiary, associate, and joint venture, right? So friends, it has only covered the holding. Not the investor, not the venturer. Now, let me ask you a question. If Ind AS is applicable to a subsidiary company, okay? If Ind AS is applicable to a subsidiary company, whether it is applicable to the holding or parent, yes, it is applicable. Yes, applicable. If Ind AS is applicable to the joint venture, whether it is applicable to the venturer, on the upstream, only holding is covered. Venturer investor is not covered. Not applicable. Not applicable. If Ind AS is applicable to associate, is it applicable to the investor? Not applicable. Now let's go to the upstream entity. If Ind AS is applicable to the company who is a parent or holding company, whether Ind AS is applicable to the subsidiary company, the answer is yes. If Ind AS is applicable to an entity who is venturer, this entity is venturer. So for this entity, subsidiary, joint venture, associate, all applicable. Yes, applicable. On the downstream, all three are applicable. If an entity is an investor on Ind AS, applicable. Yes, it is applicable to the associate also. It is applicable to the associate also, right? Is that clear, my dear friends? Have you understood this part? Yeah? Holding, subsidiary, associate, and JV of such company? Yes? Friends, Ind AS, there was another notification dated 30th March 2016. It says that Ind AS is applicable to all listed NBFC companies. All listed NBFC companies, right? Now, as I told you, on 30th March 2016, the roadmap for applicability of Ind AS for NBFC company was defined. And their first year was 2018-19. And on 11 October 2018, the format of financial statement, which is Division 3 of Schedule 3, was introduced and notified, right? So friends, the roadmap for applicability of Ind AS was also notified on 30th March 2016 for NBFC companies, which says that Ind AS is applicable to all listed NBFC companies and unlisted NBFC company whose net worth is equal to or more than 250 crores, right? If Ind AS is applicable to Bajaj Finance Limited, it is automatically applicable to the holding of Bajaj Finance and the subsidiary, joint venture, and associate of Bajaj Finance. Okay. Now, on which entities Ind AS is not applicable? Ind AS is not applicable to the non-corporate entity, right? It cannot apply Ind AS even voluntarily. Ind AS is not applicable to SME listed companies, right? So Ind AS is not applicable, but can apply Ind AS voluntarily. If they want, they can apply. Banking company, friends, HDFC Bank Limited, one of the largest bank of India, listed bank, Ind AS applicable? No. Reserve Bank of India has deferred the applicability of Ind AS for Indian banks, and the final date has not yet notified. Final date has not yet been notified. Okay. So friends, Ind AS is not applicable to bank. Sir, if Ind AS is not applicable to that SME listed companies, banks, then sir, what is applicable? Accounting standard notified by MCA wide companies AS rules 2021 will be applicable. Insurance companies, my dear friends, insurance companies on 30th March 2026, 30th or 31st March 2026, IRDA, Insurance Regulatory Development Authority of India, IRDAI came with a notification circular, and IRDAI says that insurance company will apply Ind AS from the financial year 26-27. From the financial year 26-27. Okay. So it is applicable from 1st April 2026. It is applicable from 1st April 2026. Okay. So it is applicable from 1st April 2000. But sir, is it mandatory? So they have given a relaxation also. They said these insurance companies have to make an attempt, and if they found that there is a challenges in the implementation, they can defer it for 1 year. Okay. Okay. But yes, the journey of Ind AS for insurance company has been started effective from 1st April 2026. Sir, any other company on which Ind AS is not applicable? Yes. If there is a standalone company means no my bap. No my bap means no parent, no subsidiary, associate, joint venture, right? So no upstream, no downstream. There is only a single company, right? There is only a single company. No upstream, no downstream. Friends, companies whose net worth is less than 250 crores, then Ind AS is not applicable. But again, these companies can apply Ind AS voluntarily. Sir, non-corporate entity cannot apply even voluntarily. Sir, SME listed company can apply voluntarily. Sir, bank? No. Bank cannot apply even voluntarily. Sir, insurance company, I told you that they have started from 26-27. But of course, if they found it challenging, they can defer it for 1 year. Companies whose net worth is less than 250 crore. Companies whose net worth is less than 250 crore, they can also apply Ind AS. They can also apply Ind AS voluntarily, right? Overseas entities. Sir, Reliance has a subsidiary in USA. Reliance has a subsidiary in Singapore. Whether that US entity or Singapore entity will apply Ind AS for US or Singapore filing? Answer is no. The USA entity will follow US GAAP. The Singapore entity will follow Singapore financial statement, Singapore financial reporting standard for Singapore filing. But sir, we understood overseas entities will not apply Ind AS, but how come? How come these companies like Reliance will do the consolidation? So how the Reliance were doing the consolidation when they were following accounting standard? Right? They always have invested in the overseas entities. So friends, for the purpose of consolidation, their US GAAP or their SGFRS accounts has to be migrated to Ind AS only for the purpose of consolidation of Reliance, special purpose accounts. Okay. So this US subsidiary or Singapore subsidiary's financial statement under US GAAP or Singapore financial reporting standard has to be migrated to Ind AS. Reliance management will migrate their accounts to Ind AS for the purpose of Reliance consolidation. Okay. Last point I am skipping just for 5 minutes. Last point. Okay. Okay. Right. So friends, NBFC company having net worth less than 250 crore. What about that? If an NBFC company is having a net worth of less than 250 crore, whether they will apply Ind AS? If NB company, if an NBFC company has a net worth of less than 250 crore, no, they will not apply Ind AS. They will also not apply Ind AS even voluntarily, right? No, it cannot apply even voluntarily, right? Is that clear? If NBFC company has a net worth of less than 250 crore, they cannot apply Ind AS even voluntarily. NBFC company is listed like Bajaj Finance Limited. Ind AS is applicable. Answer is yes. Unlisted NBFC whose net worth is greater than 250 crore, Ind AS is applicable, right? Unlisted NBFC, okay, net worth is less than 250 crore, Ind AS not applicable. Ind AS not applicable, right? Is that clear? Is that clear, my dear friends? Now, this last point. If NBFC is a subsidiary, holding, associate or JV of non-NBFC company, friends, Reliance Industries Limited, RIL. Reliance Industries Limited, RIL. Okay. What is RIL? NBFC or non-NBFC? RIL is non-NBFC. Reliance has a subsidiary, right? RIL NBFC Private Limited, right? Net worth is less than 250 crores. First of all, tell me, going by its own criteria, going by its standalone criteria, whether Ind AS is applicable or not applicable to this NBFC company. Not applicable. Why? Private limited entity, unlisted entity, net worth is less than 250 crore. They cannot apply even voluntarily. But RIL is a non-NBFC. They can apply, they have to apply Ind AS mandatorily. Listed entity, big listed entity, right? Big listed entity. Now, friends, this, if Ind AS is applicable to a company, if Ind AS is applicable to a company, it is automatically applicable to the holding of such company, subsidiary, associate, and joint venture of such company. So this NBFC company is a subsidiary of a non-NBFC company, right? And on this non-NBFC company, Ind AS is applicable. So whether Ind AS will be applicable to this NBFC company, answer is no, right? So what is this? What is this provision? It says that if NBFC company is a subsidiary company, associate, JV, or holding of non-NBFC company, then Ind AS is not applicable on such NBFC company just because of relationship with the non-NBFC company, right? For example, we have taken another example. ABC Finance Private Limited, NBFC, is subsidiary, associate, JV of non-NBFC entity. Then Ind AS is not applicable to NBFC entity, right? Provided it is unlisted and net worth is less than 250 crore. Sir, if it is unlisted and net worth is more than 250, फिर तो उसके खुद के क्राइटेरिया के हिसाब से इंड एस अप्लाई हो गया ना, रिलेशन की वजह से नहीं हुआ, खुद के क्राइटेरिया की वजह से हो गया. ABC Finance Private Limited is subsidiary, associate, and JV of NBFC entity, Bajaj Finance Limited. So this ABC Finance Private Limited is a subsidiary of Bajaj Finance Limited, who is also NBFC. Then it will be applicable. Then it will be applicable. So let me clarify here so that when I'll provide you notes, you will not confused. ABC Finance Private Limited having net worth less than 250 crores. Right? So again, let me write here also so that you will be able to understand that we are talking about those NBFC companies on which on their standalone criteria Ind AS is not applicable, right? Okay, my dear friends, have you understood it? Yes. Have you understood? Not understood? Yes. You understood it? Okay. So we discussed this part also, right? Now let's do the quick case study on applicability. Quick case study. For example, so we are taking a case study on Reliance, RIL Limited, Reliance Industries Limited. RIL, Reliance Industries Limited, Reliance Industries Limited, RIL. Reliance Industries Limited is a listed company. Okay. Whether Ind AS is applicable है या नहीं है? Ind AS अप्लाई होगा या नहीं होगा? Yes, होगा. Reliance is a big listed company. Ind AS will be applicable on Reliance. होगा. Yes. Yes. Okay. Ind AS will be applicable on Reliance. Ind AS will be applicable only on standalone or console, both. On both financial statement, Ind AS will be applicable. Okay. Now, my dear friends, RIL Private Limited, RIL World Private Limited, RIL World Private Limited, okay? RIL World Private Limited. RIL World Private Limited, sorry, first of all, let's talk about RIL India Private Limited. RIL India Private Limited is a parent of Reliance. Whether Ind AS will be applicable to this RIL India Private Limited? Yes, it is holding company of the RIL. It is holding company, it is parent of RIL, and hence Ind AS will be applicable. Why? Why? Because it is a holding of a company on which Ind AS is applicable. Holding of a company on which Ind AS is applicable, right? Holding company of Ind AS entity, right? Clear? So we discussed now, if Ind AS is applicable to RIL or a company, it is automatically applicable to the parent or holding of such company and subsidiary, associate, joint venture of such company. What about RIL World Private Limited? RIL World Private Limited is an investor in RIL, and RIL is an associate of RIL World Private Limited. So RIL is an associate. Whether Ind AS is applicable to the investor? Answer is no. I told you, no, on venture and investor, no, right? So not applicable, as it is investor of Ind AS entity, right? Okay. Now, of course, applicable, listed entity, hence Ind AS applicable. Okay. RIL Info Private Limited net worth is less than 250 crore. There is a company RIL Info Private Limited, net worth is less than 250 crore. Ind AS applicable, not applicable? Yes, Ind AS will be applicable now. Ind AS will be applicable or not applicable? Ind AS will be applicable. Okay, Ind AS will be applicable. RIL Info Private Limited net worth is less than 250 crore. It is a subsidiary of RIL. Yes, subsidiary of a listed company. Ind AS is applicable. Why? Because it is a subsidiary of a listed company. Ind AS will be applicable, right? Ind AS will be applicable, right? Not applicable here. Let me write applicable. Okay. Here it is also applicable. Here it is also applicable. Then RIL Bank Limited, subsidiary of RIL. Tell me whether Ind AS will be applicable to this bank. Answer is no. On bank, Ind AS cannot be applied. So whether Ind AS will be applicable to this bank. So there is a specific exemption where RBI has deferred the Ind AS applicability to the bank sine die, right? So bank has to file their accounts. Bank has to file their financial statement into accounting standard. But if this bank is a subsidiary RIL Bank Limited, my dear friends, how Reliance will do the consolidation? So for the purpose of Reliance consolidation, they will for the purpose of Reliance consolidation, they will prepare fit for consolidation special purpose Ind AS accounts only for the purpose of Reliance consolidation, not for the purpose of public, not for the purpose of filing. Okay, they will file their accounts with MCA, ROC, Income Tax Department, SEBI, Reserve Bank of India into accounting standard, right? Not applicable being a bank, right? But for Reliance consolidated financial statement, for CFS purpose, this bank will prepare Ind AS financial only for the CFS purpose, fit for consolidation, special purpose accounts. Okay. RIL Insurance Limited, it is associate of RIL. Yes, Ind AS applicable, but there is 1 year of, there is 1 year of they have given a option. But if it is an associate of RIL, if it is preparing the Ind AS financial statement for RIL, of course, they have to file their Ind AS accounts also, applicable being an associate of Ind AS entity, right? Then RIL India SME Limited. This is listed on SME Stock Exchange, subsidiary of RIL. So on the SME listed entity, Ind AS is not mandatorily applicable. It is voluntary, right? So voluntary applicability. So friends, what's your view? if it is a subsidiary of RIL, this SME entity in any way prepare the Ind AS financial statement for Reliance consolidation. So they have to prepare their Ind AS financial for the consolidation also, right? RIL NBFC private, RIL NBFC Limited net worth is more than 250 crore. It is subsidiary of RIL. So going by its own criteria, Ind AS is applicable, right? Ind AS applicable, not just because of subsidiary. Remember, this NBFC is a subsidiary of non-NBFC. So you don't need to see the relation. Ind AS applicable due to its own net worth criteria. RIL NBFC Private Limited net worth is less than 250 crore. Net worth is less than 250 crore. Subsidiary of RIL? No, not applicable. Not applicable. You remember I told you, na? If NBFC company is a subsidiary associate joint venture of non-NBFC company, then Ind AS will not be applicable to NBFC company just because of relationship. But sir, it is a subsidiary of Reliance. They have to do the consolidation also. Yes, for CFS purpose, this company will prepare Ind AS financial. Okay. Sir, can they apply voluntary? No, not applicable. Even voluntarily. RIL XYZ Private Limited. RIL XYZ Private Limited net worth is less than 250 crore, associate of RIL. Yes, Ind AS applicable. If Ind AS is applicable on an entity, it is applicable to the subsidiary, joint venture and associate of such entity. Ind AS is applicable. Okay. RIL ABC Private Limited, it is a joint venture of RIL. Yes, Ind AS applicable. Ind AS applicable being associate of Ind AS entity. Right? Ind AS applicable being JV of Ind AS entity. Okay. RIL LLP, non-corporate entity. RIL invested in LLP. Non-corporate entity, not applicable. Being a non-corporate entity. But how the RIL Reliance will do the consolidation for CFS purpose? LLP will prepare Ind AS financial. RIL Africa Limited, overseas entity. It is a subsidiary of RIL, African entity. Not applicable. Being a foreign entity. But how Reliance will do the consolidation? For CFS purpose, overseas companies financial statement has to be migrated into Ind AS. कौन करेगा? यहां वाले लोग ही करेंगे. Yes. Okay. So friends, I hope the applicability roadmap has been clear to all of you. Is it clear to you or is it clear to you? Clear in mind or clear from mind? Clear in mind. Okay. Now talking about net worth. Sir, you were talking about net worth of unlisted companies for more than 250 crores, right? Sir, what is the meaning of the word net worth? What is the meaning of the word net worth? Net worth means paid up share capital. So net worth is defined in section 2, clause 57 of Companies Act 2013, right? Section 2, clause 57 of Companies Act 2013. Okay. So net worth means paid up share capital plus security premium plus reserves created out of profit minus miscellaneous expenditure to the extent not written off. While it is written here, but it is having no use. This concept has been abolished long back, but still the definition has not been changed. So if in the examination, the net worth calculation will come, you have to write paid up share capital plus the security premium plus reserves created out of profit minus miscellaneous expenditure to the extent not written off, right? This is the definition of net worth. Now, for checking the net worth, whether Ind AS is applicable or not applicable to unlisted company, whether you have to see the standalone financial or consolidated financial, it has to be seen on the standalone financial statement, right? So net worth has to be checked on the standalone financial statement. So whether for checking the applicability of Ind AS, right, whether you need to see the unaudited financial statement, for example, in April, you have closed your financial statement and auditor has not done the audit. So will you take a decision on the basis of unaudited accounts or on the audited accounts? So net worth has to be checked on the basis of year end. First of all, year end audited standalone financial statement. Okay, year end audited financial statement. For example, let's say the net worth of ABC Private Limited, right? They have in financial year 1920, they have a net worth of 190 crores. Okay. In 2021, they have a net worth of 210 crores. In 21-22, they have a net worth of 270 crores, right? So instead of 270, let's write 240. In 22-23, they have a net worth of 180 crores. In 23-24, in just a minute. In 23-24, they have a net worth of 265 crores. Okay. Friends, tell me, Ind AS is applicable from which year? Ind AS is applicable from which year? Tell me. So Ind AS will be applicable immediately from next year, that is FY 24-25. Let me write here. Okay. So in FY 24-25, Ind AS accounts prepared and the net worth has gone down to 210 crores again. Friends, in 24-25, when the Ind AS accounts prepared, Ind AS accounts, first Ind AS financial statement prepared and filed, and the net worth has gone down below 250 crores, right? And net worth has gone down below 250 crores. Friends, tell me, if net worth has gone down below 250 crores, tell me, can this company go back to accounting standard again? So from 25-26, can this company go back to accounting standard from 25-26? 25-26. Tell me which standard is applicable. Which standard is applicable in 25-26? Tell me. So in 25-26 also, Ind AS is applicable, right? So if Ind AS once applicable, it cannot be moved back to AS, right? If a company has applied Ind AS voluntarily, then it has to apply forever, right? It has to be applied forever. So there is no U-turn. There is no U-turn. Once you apply Ind AS, you have to be in Ind AS forever. There is no U-turn, my dear friends. There is no U-turn. Okay. I hope it is clear to all of you, my dear friends. I hope it is clear to all of you. It is clear or not clear? So friends, we discussed in detail. So this was the roadmap. When this Ind AS notification came, this was the initial roadmap, right? Now it is not valid right now. Okay. So talking about just a minute. I hope my screen is visible now. So friends, this is what I have discussed now, right? 16 February 2015, 30th March 2016. Okay. This is what I have discussed now. Ind AS is applicable to all listed company except SME listed company, unlisted company whose net worth is more than 250 crores. And Ind AS, if it is applicable to one company, it is automatically applicable to the holding, subsidiary, associate, and JV of such company. On 30th March 2016 notification, Ind AS is applicable to all listed NBFC companies. For unlisted NBFC company whose net worth is greater than equal to 250 crores. Holding, subsidiary, associate, and JV of such company, okay, is also applicable. Not applicable, non-corporate. SME listed companies can apply voluntarily. Banking company not applicable, it cannot apply voluntarily. Insurance company has to apply from this year. 1 year relaxation is there. Unlisted company whose net worth is less than 250 crores. Okay. Overseas entities need to apply their local GAAP. Okay. And NBFC, if NBFC is a subsidiary, joint venture, associate, or holding of a non-NBFC company, then Ind AS is not applicable on such NBFC company, right? We discussed points relating to applicability. Insurance and banking companies are not allowed to apply Ind AS even voluntarily. My dear friends, please remove the word insurance, right? So this slide is prior to March. So banking companies are not allowed to apply Ind AS even voluntarily. Companies that are listed or in the process of listing in the SME stock exchange are not allowed to apply mandatorily, but these can adopt Ind AS on voluntary basis. Companies not covered in roadmap as per net worth or any other criteria are exempted from Ind AS. For example, Ind AS is not applicable to non-corporate entities whose net worth is less than 250 crores. Okay. Net worth has to be calculated as per Section 2, Clause 57 of the Companies Act 2013 and calculated on the standalone financial statement. Ind AS will apply to both CFS as well as SFS. Ind AS will be applicable to the standalone financial statement as well as consolidated financial statement. Ind AS once adopted, either voluntarily or mandatorily, it cannot be revoked in the future years. As an Indian company which is subsidiary, associate and JV of a foreign company, for example, ABC India Private Limited, it is a subsidiary of ABC USA Limited. So the parent is sitting in US and parent is also listed in US. It is not an Indian entity, it is a US entity, right? So the US entity has a subsidiary in India. And this Indian subsidiary is very small. It's a private limited entity. Net worth is less than 250 crore. Very small entity. But it is subsidiary of the US parent. It is subsidiary of the US parent. Now the question is whether Ind AS is applicable to this subsidiary in India. So friends, no. For looking at the applicability of Ind AS for Indian company, you have to look at the criteria from the Indian company perspective. Just because the parent is a US entity and listed in USA, Ind AS is not applicable to Indian companies. Okay. Right. And the foreign companies even, so on foreign companies, Ind AS is not applicable. Those foreign companies needs to apply their local GAAP, but for Indian consolidation, their local GAAP financial statement have to be migrated to Indian GAAP, right? Net worth we discussed, my dear friends. It is as per Section 2, Clause 57 of Companies Act 2013. Net worth has to be seen from the standalone financial statement. So net worth means paid up share capital plus reserves created out of profits, right? Plus security premium minus accumulated losses minus deferred expenditure, miscellaneous expenditure to the extent not written off. Now, few questions. Tell me what is the answer of this question. Tell me guys, what is the answer of this question? Friends, let me know the answer of this question. ABC India Private Limited is having a net worth of 100 crores and it is a subsidiary of ABC USA LLC. It is a private limited entity, net worth is 100 crores. Ind AS applicable, not applicable by its own criteria. It is a subsidiary of ABC US company. Whether you need to look at this foreign entity for applying Ind AS to Indian entity, no. The foreign company's net worth is 1000 crore, doesn't matter. Even if the net worth is 1 lakh crore, doesn't matter. Advise the Ind AS applicability on both these companies. Ind AS is not applicable on Indian entity as well as US entity. Second question. ABC India Private Limited, unlisted entity. Net worth is 300 crore, more than 250 crore. Yes, Ind AS is applicable on this entity. And it is having subsidiary in Bangladesh and Vietnam. This entity has a foreign subsidiaries. These companies are very small companies with a net worth of less than 50 crore. This Bangladesh and Vietnam entity has a net worth of less than 50 crore. Whether it makes any difference if this Bangladesh and Vietnam entity has a net worth of 5 lakh crore? Whether it makes any difference? Answer is no. Advise the Ind AS applicability on both these companies. Friends, on Indian company, Ind AS is applicable. For foreign company, Bangladesh and Vietnam, not applicable. But the foreign company financial statement has to be migrated into Ind AS for the Indian company consolidation, right? Yes. Third question. Oh, the answer comes first. ABC India is a listed company in India. Ind AS applicable? Yes, applicable. It has a subsidiary XYZ India listed on SME Stock Exchange. It has a subsidiary XYZ India listed on SME Stock Exchange. Whether Ind AS applicable? Mandatorily not applicable. Voluntary it can apply. And it has an associate also, which is a bank. On bank, Ind AS is not applicable, even voluntary. Advise the Ind AS applicability on such company. ABC India, which is listed, applicable. SME, not applicable, but it can apply voluntarily. Associate, bank, not applicable. But this SME and bank will prepare fit for console Ind AS financial statement. Fit for console means console purpose के लिए. ABC Limited is having an investment in ABC and Associates LLP. ABC is applying Ind AS while preparing its financial statement. Right? Advise the applicable gap on LLP, non-corporate entity. ICAI, accounting standard. Okay? Accounting standard. Friends, A Limited is a listed company. Okay? It is an associate of ABC Private Limited. Tricky question. So A Limited is a listed company, Ind AS applicable. A Limited. Who is associate? A Limited is associate. Means A Limited is a downstream entity. Who is upstream entity? ABC Private Limited. Private Limited. ABC Private is an investor. ABC Private is an investor. And the net worth of ABC is less than 250 crores. Advise the Ind AS applicability on A and ABC. Friends, on A Limited, Ind AS is applicable. Whether it is applicable to the ABC Private Limited also. If Ind AS is applicable on a company, it is automatically applicable to the holding or parent, subsidiary, associate, and joint venture. For the upstream entities, only parent is covered. Venturer and investors are not covered, so not applicable. A Limited, of course, applicable, listed company. ABC Private Limited is an investor of A Limited, not applicable. Sir, can ABC Private Limited apply Ind AS voluntarily? Answer is yes, if it is not a bank, if it is not a NBFC company, yes, it can apply Ind AS voluntarily. Sir, if it can apply Ind AS voluntary, then there is no problem because ABC Private Limited has to do the consolidation also. But sir, if ABC Private Limited will continue its accounts under accounting standard, ICAI, and A Limited has to prepare under Ind AS, then how ABC Private Limited will do the consolidation? In that case, A Limited has to prepare accounting standard ICAI financial statement for the purpose of ABC Private Limited consolidation. Only for the purpose of consolidation. But for the purpose of filing to the SEBI, MCA, Income Tax Department, everywhere, for the annual report, Ind AS financial statement will be applicable for A Limited. Right? ABC India Limited is a listed company in India. Listed company in India, ABC India Limited. Yes, Ind AS applicable. Ind AS applicable. It has a subsidiary which is unlisted NBFC. It has a subsidiary which is unlisted NBFC. Okay, which is unlisted NBFC. Subsidiary is unlisted NBFC. Okay, subsidiary is unlisted NBFC, my dear friends. Unlisted, this company is non-NBFC, non-NBFC. Subsidiary is NBFC. Okay, having a net worth of less than 250 crores. So one thing is very clear. It is unlisted NBFC and net worth is also less than 250 crore. So going by its own criteria, Ind AS is not applicable. Discuss the applicability of Ind AS. Discuss. So friends, you remember I have given you a special exemption clause, a special exception, which says that if Ind AS is not applicable to the NBFC company by its own criteria, it cannot be automatically applicable to the NBFC just because of relationship with the non-NBFC company. So in this case, on ABC India, Ind AS is applicable. On the NBFC subsidiary, not applicable, but for the purpose of consolidation, this company will prepare Ind AS accounts only for the purpose of consolidation, right? So friends, we have covered with this, we have covered the overview and introduction to Ind AS. We have also covered the roadmap and applicability of Ind AS, right? Now I have to cover some statutory regulations quickly. So one question has come in exam. So we'll cover quickly relevant sections referring to Ind AS in the Companies Act 2013 and the rules. Friends, to summarize, right? As we discussed, the applicability roadmap, right? The applicability roadmap is defined under 16 February 2015, is defined under 16 February 2015 and 30th March 2016 notification, right? Notification. So friends, the 16 February 2015 notification says that Ind AS is applicable to all the listed companies, right? All the listed companies, okay? And it also says that Ind AS is applicable to the unlisted companies whose net worth is more than 250 crores. If Ind AS is applicable, right? If Ind AS is applicable to any company, it is automatically applicable to the holding of such company, subsidiary, joint venture, associate of such company, right? So friends, then another notification talks about NBFC companies, same rule, all listed NBFC and unlisted NBFC having a net worth of less than 250 crores. Sorry, more than 250 crores, not less than 250, more than 250 crores, right? And friends, Ind AS is not applicable to the bank, non-corporate entity, SME company. However, they can apply voluntarily SME. So companies having a net worth of less than 250 crore, overseas companies, okay. So Ind AS is not applicable to these entities, right? Talking about a net worth criteria, section 2 clause 57 talks about the definition of net worth. It talks of paid up share capital plus security premium plus reserves created out of profit minus miscellaneous expenditure to the extent not written off. Sir, whether revaluation reserve will be part of the net worth? Answer is no. Sir, whether money received against share warrants, right? Money received against share warrants, whether that will be part of the net worth? Answer is no. Sir, share application money pending allotment, whether it will be part of the net worth? Answer is no. It is not part of the net worth. Okay. It is not part of the net worth. Okay. Right. So friends, if I talk about this thing, right? So this was the net worth criteria we have talked about. Okay. So my dear friends, now talking about some relevant statutory provisions. Okay. Just a minute, my dear friends. I am sharing the meeting ID on the screen and you have to join using this meeting ID on the Zoom app. Just a minute. I'm sharing the
Please
meeting.
mention in the screen so that the student can see and join the session.
Yeah. I'm doing that. Actually, I'm not able to copy on the this.
Just right. You cannot copy.
I'm writing.
Just right.
So friends, meeting ID to join this Zoom link is 844-7686 and 2035. So my dear friends, please request you to join on Zoom using this meeting ID, right? Because the representative from ICAI, Shilpa ma'am, will address for the next 10 minutes and she will tell you some important aspects about this course, right? So this is the meeting ID. I would request each one of you, please join using this meeting ID on the Zoom link. Okay. Yes. So friends, talking about quickly some provisions. Relevant sections referring to Ind AS in the Companies Act 2013. Okay. Section 2, clause 2. Section 2, clause 2 states, and I am talking about the Companies Act provision. Section 2, clause 2 states that the accounting standard means the standards of accounting or any addendum thereto for companies or class of companies referred to in section 133. Friends, section 2, clause 2 says that what is meant by accounting standard? Any standard of accounting. okay, which is referred in section 133. And under section 133, two standards are referred, which is accounting standard and Indian accounting standard. Both are referred under section 133. So if it is a listed company, it has to follow Ind AS. If it is unlisted company with net worth less than 250 crore, it has to follow accounting standard. My request is to please keep on mute, everyone. Please keep on mute.
ठीक है
सर इसका प्रोसेस कर लो
अच्छा
इससे कर लीजिएगा तो
स्क्रीन शेयर करनी
सीट से
फिर से करनी
So,
मोबाइल से
Ajit ji, please keep on mute. Ajit ji, please keep on mute.
अच्छा की कौन मिनट
Yeah. Yes. Section 133, as I told you, section 133, your article, and probably few of you are pursuing your articleship also. You must have seen the audit report where it says that the financial statement of the company is presenting true and fair view because the company has prepared the financial statement in accordance with accounting standard or Ind AS notified under section 133 of the Companies Act 2013, right? So in section 133, this AS or Ind AS has been notified, right? Section 129 suggests the financial statement shall give a true and fair view of the state of affairs of the company or companies comply with accounting standards notified under section 133 and shall be in the form or forms as may be provided for different class of companies in schedule 3. So 129 says that the financial statement has to provide a true and fair view by applying the relevant accounting standard and by applying the relevant format of the financial statement. So it is talking about AS and Ind AS, and it is also talking about division 1, 2, 3 of schedule 3, right? Section 134, right, subsection 5 clause A, it says that a statement that the applicable accounting standard had been followed, right? A statement that the applicable accounting standard had been followed with proper explanation relating to material departure, if any, shall be given in the director responsibility statement, right, friends? Sir, where this director responsibility comes, this director responsibility statement comes under director's report. Sir, where this director's reports comes, is it part of the financial statement? No. Director report is part of annual report. It is part of annual report, right? And in the annual report, when you look at the director responsibility statement, it provides you that all the relevant accounting standard have been followed. If there is any deviation or departure, that qualification has to be given in the director's report also. Section 143, auditor has to opine, means give an opinion whether the financial statement comply with the accounting standard or not. This is one of the heart of the audit report, where the auditors are talking about the financial statements are presenting true and fair view as the company has prepared the financial statement in accordance with accounting standard or Ind AS in accordance with section 133 of Companies Act 2013. Section 230 talks about the merger and amalgamation of the companies, right? It is talking about that this merger and amalgamation, right? The accounting of the merger and amalgamation has to be done following the relevant accounting standard or Ind AS, okay? Section 66 is a section which talks about reduction of share capital, and it also talks about that the accounting of the reduction of share capital has to happen in accordance with the relevant section of the Companies Act, in accordance with the relevant section, which is 133 in this case, right? In 133, AS is also there, Ind AS is also there. For example, if Bharti Airtel is doing some reduction of capital, it has to follow Ind AS. For example, if ABC Private Limited, whose net worth is less than 250 crore, if they are following accounting standard, they have to follow accounting standard for doing the accounting of reduction of share capital. My dear friends, you know, for every companies, the regulator is MCA, Ministry of Corporate Affairs, right? So MCA is the mother of every companies. But if it is a listed company, my dear friends, if it is a listed company, the another parent is also there. Who is the another parent for the listed companies? It is SEBI, Securities and Exchange Board of India, SEBI. SEBI is there, right? So there are some SEBI regulations also. In the SEBI regulation, they have on 30th November 2015, they told that every listed company, while publishing their quarterly results, they have to refer the format of P&L which is in alignment with the Schedule 3. Okay, that is one. Then these listed companies have the SEBI LODR regulations for the purpose of filing of the financial results with the stock exchanges, for the purpose of applying the accounting standard or Ind AS, whatever is relevant to them. And of course, for listed companies, Ind AS is relevant, right? Not accounting standard. Ind AS is relevant to them. So they have to follow that. So these kind of regulations are there under Companies Act and under the SEBI Act. Okay. So my dear friends, we covered the overview and introduction of Ind AS. We have covered the genesis of IFRS. We have covered the roadmap and applicability of Ind AS, right, with lot of examples and case studies. And then we have covered the statutory regulation provisions, my dear friends. We have touched base on the division 1, 2, 3 of Schedule 3. We have not covered division 2 to Schedule 3 in detail. So my dear friends, I will cover this division 2 to Schedule 3 in further detail in my Ind AS 1 class, right? I will cover that division 2 to Schedule 3 for 1 hour in my Ind AS 1 class. I'll have 2 class on Ind AS 1 and I'll cover there. Okay. Yeah. Over to you, Shilpa ma'am.
Thank you, sir. Good morning, students. Good morning, sir. Hope you have, this was an introductory class, students. So I hope you were able to appreciate what is Ind AS, what was the genesis of Ind AS, and how it has to be studied. This is very important because though every chapter is provided to you with comprehensive understanding, with small illustrations and everything, still, you students, you should be able to understand or learn Ind AS on your own through bare text. So bare text, where it is provided, what is the section wise weightage, this I'll be trying to cover in this for 10 minutes. So students, first of all, let us understand what is the, since it is your first class, you should understand your syllabus first. So your syllabus has been divided into 8 sections. Every section has topics, number of topics. There may be that in one section we have 1 or 2 topics, and there may be that it is also possible that in any other section we have more than 5 standards also. Like in your section 3, which is assets and liabilities based standard, we have number of standards. So these section, the purpose of dividing the entire syllabus into section-wise weightage is for your classification, and to understand the importance of the standards, and also to understand what will be the testing in your examination. So suppose we have section 2, which is your income-based standards. We have only one standard, that is Ind AS 115. So in that case, one section which have 5 to 10% of weightage and only one standard, it means sure shot in every examination question is going to appear from that particular section. However, a section which carries number of standards, there you have to see that what there may be probability that in that case that what kind of question may be asked and from which standard will be asked. But still the weightage will be there, and that weightage will mention you. For example, that section 3, which we have 10 standards, the weightage of that particular standard is 20 to 30%. It means more number of questions will be asked from that particular section. So it is not that your question, one question would be of 30 marks, because maximum marks for one particular standard is in your descriptive part is 14 marks. That will be basically from your consolidation. So to understand your syllabus and to start your preparation, you have to refer your section-wise weightage, which I am trying to share with you all. Right now, our website is under maintenance. Still, you can go through those section-wise weightage. Just a minute. Let me just share with my screen, and then we'll be okay. So students, if you see, I'm having this institute website. In this institute website, hope you can all see my screen. Students, just unmute yourself and tell me, are you able to see my screen? Shailendra, Swarna, are you able to see my screen? Okay, see. Right now, we have the student section through which we go to knowledge portal, but this is under maintenance. So I'm just going through the home page. Home page also, you have new scheme of education during this one. When we click here, when we click here, we'll have these number of facilities which you will find in your knowledge portal also. This is given here also. you can go through this link also. So here it is mentioned section-wise weightage. This section-wise weightage, when you click, you find some net issue is there. Just a minute. Huh? Okay, here you are finding final course. We go to final course. First is your paper 1 financial reporting. Section-wise weightage of this particular syllabus is there. See. So section 1 carries your introduction to general purpose financial statement, which today we have covered in our first class. Then tomorrow, day after tomorrow, we'll be having conceptual framework and then application of Ind AS. So here all these standards, Ind AS 1, 34, 7, 8, 10, 113 and your conceptual framework. This is covered in your section 1 weightage. The weightage of this section is 10 to 15%. 10 to 15% means suppose you'll be having 30 marks objective type question in your examination question paper and 70 marks will be for your descriptive part. However, for descriptive part, we have one choice also. So that will be also 14 marks. So in total, we'll be having 84 marks descriptive question, out of which you have to do 70 marks questions. And for objective type, there will be no choice. So 30 plus 84 is 114 marks. 114 marks here, I'm not counting the internal choice also. So for 114 marks, if we calculate 15% weightage, we'll get around somewhere your, say, almost 18 marks. Okay. So for 18 marks, this particular section maybe asks for maximum. And for minimum, it will be for, say, 11 or 12 marks. Similarly, the entire syllabus has been divided into different sections. You have to refer these sections while your practice, while for your revision, to understand the importance of the topic and to understand what kind of question may be asked. For example, a question is for this particular 5 to 10% weightage, no question will be exceeding your maximum 12 marks. So no question will be there for 14 marks on this particular topic. So you can, when you go through this chapter, you'll find the questions which are given there in the chapter is also of small length, which may be asked in your 5 to 10% weightage. Okay. So that will also help you understand. This section-wise weightage is very important. You have to keep this in mind before you start every chapter and at the time of your revision as well. So one thing which I'm right now, stop sharing. Okay. So students, this was your section-wise weightage. This you have to take care of. And one more thing, students, we have a feedback form also, which is also there on the portal. Please go through that right now because we are shifted. We are in a transition position. Our website is under maintenance. You can just let me know what was your experience for today's class and what are your expectations for your future classes. Students, I want everybody to speak. So, Charit, Kanhaiya, Rachit, Ravinder, Samsung, I don't know who is there from Samsung, Shailendra, and Swarna. Everyone, one by one, I'll just call the name, just unmute yourself and just share with me what is your experience and what is your expectation. Huh? Okay, Charita, we'll start with you. Unmute yourself. Good morning. Good morning, Charita. I am not able to get your message. Just a minute. You are unable to speak? Okay. A mute option is, let me see, I can give you the option or not. Make host, make co-host, rename chat, put in a waiting room. Okay. स्टूडेंट हम उनको अनम्यूट करने का ऑप्शन दे सकते हैं, ये अनम्यूट नहीं कर पा रहे हैं. Raise your hand, students, and those who, yeah, I'll ask everybody. Now you can unmute yourself, Charita. Charita, you can unmute yourself. Talk to me. Yeah. If you want, you can just show your video also. It's completely okay. My video is also off now. Okay. Yeah, Charita, are you able to unmute yourself now? Still unable. I will text through chat now. Okay, no issues. By that time, we'll have somebody else. My voice is not audible. Okay, now is it audible? Swarna? Kanaya, am I audible now?
Yes, ma'am. Yes.
Yeah. Okay. So
Yes, ma'am.
Yeah. Okay. Kanaya, we'll start with you now. You just tell me what was your experience and what are your expectations? What do you want from Board of Studies to just provide you the or facilitate you so that we can accordingly provide you the whatever features, whatever is possible. We are there to resolve your queries also. Kanaya, you have raised your hands. I just want you to unmute yourself and just talk to me.
Yes. Good
Yeah.
morning, ma'am.
Good morning.
Ma'am, I have seen that the BOS portal is under construction or under maintenance.
Yeah.
So most of the time we are not able to communicate with you guys, like faculties,
Mhm.
for our concern. Like in between the class, if we have any doubt, we cannot chat with the sir. So
Mhm.
it is very difficult to accumulate all the things at last. And
It is only transition. It's a matter of 1 week. From
yes,
next week, everything will be streamlined and you'll be able to participate. You'll be there through Zoom link also, and you'll be able to chat on real time basis. Okay.
okay,
Right now, just give us 1 week. We are under maintenance. We are working on it, and we'll definitely do something, and we'll provide you that facility also that you can ask as and when the queries comes to
okay,
you. Okay.
okay, ma'am. Thanks.
Okay.
And the
By that
second
time,
question,
Kanaya, by that time, you can do one thing. Uh, if it is not possible for you to just note it down, ask the sir at the end, or otherwise you just mail us. We'll provide the queries to sir, and sir will resolve it in the next session. Because right now, Alok sir is going to have continuously classes for almost 5 to 8 classes are there continuously for him only, so he can address it in the next class also. Okay.
okay, okay, ma'am. And my second question is, ma'am,
Hmm.
when we get the books and other resources, ma'am, because for our May 27 exam, if we
Hmm.
get books on time so that we can and deliberately marks on the books and we can refer those books only.
I understand. If you see, by the time, see, financial reporting is not that dynamic. So you can start your preparation with what is given in the web hosted. So in case your US Live portal is not working, I have given you the route also from the home page, new scheme and thing. From there, you can go through the study material also. So you start your preparation with that. Soon we'll be providing you the hard copy also. But by that time, you can take the printout of the chapters and you can start your preparation. Don't lag with that. Na? Don't wait for the hard copy of the printed book material to start your preparation. That
Oh,
won't be good decision for right now. For financial reporting, at least you can start with what is given in the study material. There won't be much changes, and whatever changes we are going to have in the next edition of the study material, at the beginning of every module, we'll be providing a page significant changes vis-a-vis the previous edition. Okay.
okay,
From there, you can understand what are the changes made in the chapter. Mostly, the changes will be in the form of addition of new questions. And some amendments came in India's one that we'll be providing you. For that, we have already provided you the amendments in the RTP of previous attempt. For May 2026 attempt, if you go through the RTP, in the part one, we have given all the amendments. You can refer those also. That will be incorporated in the study material also. So that
okay,
is the only change. After that, no amendment has come. So we are not having any very vast or huge change because of which, if you start your studies right now, you'll be lacking something. It won't be like that. Okay.
okay, ma'am. Okay,
Okay. So you start your preparation with the whatever chapters have been web hosted. Okay.
okay.
Any other thing you want from us?
Like, ma'am,
Mhm.
the classes has started now. So
Mhm.
how many months it will take to complete the classes?
Okay, see, for financial reporting, since the syllabus is huge, we'll be having almost 79 classes. So every week, if we are having 3 classes, then you can understand it will be almost your, uh, it will go till February, I believe, na? It will go
Okay,
till February. We'll be having a good number of classes for financial reporting because financial reporting is quite technical and the syllabus is also huge. So we are not uh, somewhere we are not reducing the classes. We are having full classes as you have for your private coachings like that on. So they will be completely 79 and if required, we can increase the classes also. So even
so
if we are running till February, you'll be having sufficient time for your revision also so that
yes,
you
ma'am.
can appear for your May 27 class. Okay.
Yes,
Exam.
that's what I was looking for.
Okay. See, one more thing, Kanaya, just let you know, because though we are running till February, but Meanwhile, will we also having LVRC for your May examination? Right now, we are having a LVRC for November examination. For May 27 also, we'll be having a revisionary classes also.
Okay.
So that will also help us. So don't leave financial reporting that you will start at the end. Start from the beginning and be consistent. Okay? Continuity is very important for your CA course. At least at final level, you have to maintain that continuity.
Yeah.
Okay?
Yes, ma'am. Thanks,
Okay.
ma'am.
Okay. Charita have asked me, ma'am, I want to know one thing about the applicability of NDS. As per the sir extension, it is applicable from 1617 onward. Is there an option in financial is to apply voluntarily? See, now it is bygone. 2015 and 16 has been passed. At that time, it was voluntary adoption. They when notification came for the first year, they made voluntary adoption, and from 1617 they made it compulsory. Even from 1617, they have made India's applicable, mandatorily applicable in a phase manner. For first, they have made it for the entities which were having net worth of 500 and above, and for all the listed entities, they made it in the second year. That was in the phase manner they have provided this made it applicable. But in the current scenario, we cannot go in past them. So in the current scenario, NDS is applicable to all the listed entities, and for unlisted entities having net worth of 250 crores and above, your NDS is applicable. This is the current scenario. Okay. Okay. Anyone else who else are there? Just let me see.
Yes, ma'am. Good morning, ma'am.
Good morning. Who is on that side?
Swarna Lata, ma'am. This is Swarna.
Swarna. Yeah, Swarna. Tell me.
Ma'am, everything is very organized and very sufficient, ma'am, for understanding and everything. And even the revisionary classes you said, it is will be very beneficial for us. And one thing I want to ask, ma'am, the explanation from the sir is very nice, and he is being very practical also, with the live examples like running companies which are the current companies. One thing I want to request, ma'am, that can I have the notes from which the presentations the sir is placing on? Why? Because while revising the material, I want to get so much deeper into it.
I understand. We'll be providing whatever PPT he has shown you today. That will be provided to you. Hopefully, by the end of the day, we'll be providing you that also. Whatever notes he is giving in the form of Excel, he is explaining everything. That will also be provided to you. Everything will be providing. In case sometimes it may happen that a standard spills over in 2 to 3 classes. Okay, there it may be possible that he provides his PPT after completion of the standard, but we'll request him that he provides in advance. Okay.
Yes.
But today says for our introductory class has been over in one class. Today there was only one session for introduction class done. So we'll be providing you the PPT and whatever Excel he has used for explanation.
From where we can get it, ma'am? Actually the BOS app is not been working well.
I understand that. Yeah, I understand that. For that, I have to talk to Ajit, the team which is working behind, see how it will be provided. I have to check that. I forgot that it is under maintenance. But we'll see how to provide you all. Otherwise, you can all do one thing: just put your mail ID. Those who have joined here, put your mail ID on bos@ici.in. This is the mail ID. Just put your mail ID there. We'll try to give it over the mail.
Voice is not clear. Can you repeat, ma'am?
I'm saying just note down one mail ID, bos@icai.in, bos@icai.in. Just drop your email ID in case that website is not working. Our BOS knowledge portal is under maintenance. Meanwhile, we'll try to provide you through the mail. Okay? As and when we get from the sir, we'll provide you. But I should have the email ID with me.
Yes. Ma'am, one more thing. Are you reverting only for the FR classes or for all the virtual classes, ma'am?
All FR classes.
Okay.
I'll be there. I'm Shilpa Agarwal. I'm faculty in Board of Studies Academy. I look after this particular paper. I just forgot to mention give my introduction. I'm financial reporting faculty here. So anything relating to financial reporting, you can contact me. Okay. My mail ID is shilpa@ici.in.
Shilpa,
SHILPA, all in first name, all in small letters, @ICAI.in.
Okay,
Any
ma'am.
query related to financial reporting, you can mail me. Okay.
Thank you, ma'am.
Ravindra, you wanted to say something?
Ma'am, can you repeat once your email ID, ma'am?
Shilpa, SHILPA, Shilpa @ICAI.in. You can mail your queries to me. Okay.
Thank you.
Okay. Anything else?
Good morning, ma'am.
Good morning. Who is on that side?
Ma'am, I am Ravindra.
Okay. Yeah,
Ravindra.
Ravi, tell me.
Uh, is there any WhatsApp group on which you are sharing the notes?
Okay, WhatsApp number. We'll just ask the technical
Yeah.
team to share this WhatsApp link on this chat box, and from there you can join the WhatsApp group of ICAI. We have a WhatsApp group of final course students. They will try to put it. Na? This is also good suggestion. We can do that also. I'll just request my technical team to just share that chat that WhatsApp group link there.
I provide my number 85290.
Sorry.
I provide my WhatsApp number. So
No, no, we
uh,
won't. I don't
if you
want
could,
your WhatsApp number. We'll be
okay, okay.
providing. Just a minute. Okay, Ravinder,
Yeah.
just a minute. Let me note it down. But we'll be providing you that WhatsApp link here only on this chat box.
Okay.
8529. Okay, okay. We'll try to add you there. Na? Okay. But we
Okay.
want you
Thank
to
you.
join through the link, WhatsApp link. But that WhatsApp link, technical team who is there. Um, just a minute. Let me see the participants. Who is from technical team, please provide a WhatsApp link here on the chat box. It is hope it is provided. Any other student who wants to say something? Krishna, Shailendra, you want to share something, your experience or your expectations, whatever you have?
Yeah,
Yeah,
thank you, ma'am. It's a good session. So
yeah.
basically, I just want to understand this schedule will come like a weekly basis, like we can
No, no.
see.
Schedule will be on monthly basis.
Okay.
We have scheduled all the classes, but for faculty, we'll be giving that also. It may change, but it will be on monthly basis, Sharon. But I request everybody who have joined today to be continuous in every class. I don't want any number to be decreased. Shailendra, Charitra, Kanaya, Krishna, Krishan, Ravindra, Swarna, please be continuously join the classes. Otherwise, because all the standards are interrelated, in case you miss any class, you have to go through that YouTube classes or whatever recorded sessions we have. Otherwise, you won't be able to appreciate these standards or the concepts in the standard. So it is very necessary be continuity, maintain that continuity. Okay. Anything else you want to ask, Shalin?
So it will be updated later on because I can see only first week schedule right now on portal.
Acha, we have provided it for till August. Let me see what is there. I'll
Okay.
just I'll see the schedule. I'll have to see that. Shalendra. Okay.
Yeah. Thank you, ma'am.
I'll just check in. I'll revert to you next time or on WhatsApp group. You are there on the WhatsApp group?
Yes, madam. Thank you, ma'am.
Okay. Okay. Take it. Like Krishna, you also updated, just unmuted yourself.
Yes, ma'am. I have also any query, ma'am, regarding the notes. When we can get this? Because right now the app is, I think
Study
app is
material.
under
You're talking
maintenance.
about study material.
Yes, yes. The study material notes which is shown in the lecture. So
So
how
I'll be able to
we can
reply
get
you only for financial reporting. It will take time. It will at least take a time, 1 month time. But by the time
okay,
you start your preparation from whatever this chapter is uploaded on the study BUS knowledge portal or on the website which I have shown you. No? Start your
okay,
preparation with those because we don't have much changes no, this time. So you can
yes, ma'am.
start your preparation with that. Whatever changes we'll be giving you a page before every module. Significant changes vis-a-vis previous edition of the study material. So that you
Okay,
can
ma'am.
understand what new changes, what new amendments have been made or new incorporations of questions have been done in the new edition. Okay.
Yeah, okay, okay. Thank you.
Anything else? Students, if you have anything, otherwise, see, right now, since our portal is on under maintenance, maybe that we don't have the feedback form available. From next time, whenever the portal is live, it is functional, I request everybody to fill the feedback form session wise for every session. Take 2 minutes and just fill the feedback form. Give your expectations, give your sharing of your experience for that particular faculty, anything you have. Be assured we are not going to disclose this with the faculty or with anybody, and it is not going to harm in any way. It is only going to improve ourselves and we'll be able to provide you our best services. Okay, so do fill the feedback form for every session. Okay. And I'll be touch
Sure, ma'am.
with
Sure, ma'am.
you
Thank you,
all.
ma'am.
And I'll be touch with you all, and I'll be in touch with you all. And whatever you have, you can share to me live, like you have done today. You can do that also. Okay. Okay. All the best to you. We'll just
Thank
end the
you.
class now. Okay. Bye.
Thank
Bye.
you. Thank you.
Bye.
Thank you.
Bye.
Thank you.
Session ended. Please wind up the session. Okay.
Thank you so much, ma'am. Have a good day.
Thank you. Same to you.